Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina. I'm a senior market strategist, and welcome to Capital Preservation, a Friday with the one and only Pax. Pax, how are you?
Good, Jimmy. How are you, brother?
Pretty good, pretty good. You're sounding great today. I know last week not so much, but
Oh,
you're looking great. You're sounding great.
feel great. Feel great. Last week I made a tweet, or earlier this week I tweeted. I made a tweet. I sound like an old man when the Facebook, the Twitter. I made a tweet, but I tweeted about how Craig Gordon was an old Nasdaq trader that stood next to me. Shouldn't say old. I mean, he was 15 years older than me or something, so he should be like 70-ish. He was a Deutschmark trader, and one day we were trading, we're sweating, and we're working hard, and market the Nasdaq is moving all over the place, and we were killing it. And he turned and looked at me with just this stone cold exhaustion in his face, and he said, "This is a young man's game, young person's game to be ecumenical, but this is a young man's game." And I know what he means. I now know what he means. So yeah.
Yeah. I don't know, man. I'm older than you. I'm gonna keep moving forward till the wheels fall off, man. I can't. I love this stuff. This is just great stuff.
Oh, I do too. I couldn't imagine ever doing anything different and not
Right.
doing this. I couldn't imagine not doing this.
Yeah. So good morning, chat. Appreciate everybody being here. It's a big day today. I mean, it's Friday. I get it. People want to go to the beach, but listen, it's non-farm payrolls today, right? And what's been your experience on non-farm payrolls?
Well, we used to call it unenjoyment
Yeah.
because it was, as clerks anyway, we called it unenjoyment because it was some of the craziest things I've ever seen
Yeah.
happen during a non-farm payroll, as especially in the Eurodollars when I was clerking. We were compact so close together in the pit, stomach to stomach. I mean, ass to stomach. It was weird, so tightly packed in there that sometimes our feet would be off the ground when we're quoting the markets and we're taking orders and filling orders. And on unemployment, the whole floor at 7:30, 7:29, the whole floor would go completely silent. The only thing you can hear was the click, click, click of the time clocks, and then boom, pandemonium. And one year we flew out of the pit. We exploded out of the front month euros, kind of like a pimple, just and on top of each other, on top of this guy Kevin Lavin, who permanently injured his back in this fall. And then we were fighting and punching and shoving each other to get back in the pit to service our customers. As a trader, I traded NASDAQ, so I came in an hour after the number. So it was the market would normally digest it. What was interesting is before there was a 24-hour market, when with the minis, and the NASDAQ wasn't open, was calculating where we would open. So
Yeah.
we would always gap higher or lower, especially on unemployment. Where are we going to be? I don't know. I'm 50 lower. I'm 100 lower. Like I quote on Sunday nights when the markets are busy, I'll quote what the opening call is. We'd have to make an opening call. I'll be a seller 100 lower. Okay.
Yeah, yeah, no, that was unique. The opening call was unique, just by the nature of how it all went down. Now with electronic and the algo and everything else, it's pretty seamless, right?
Yeah, right. Yeah. Now it's easy. And you have to look, you have to know what to look at in order to be able to see the gaps now. So I look at, and that kind of segues into some market talk, is I look at RTH. I want to see what the regular trading hours high
Yeah.
and low is. I really don't care about the overnight session. All these young traders talk about the London session. I had to ask the other day what do they mean when they're talking about the Asia high and the low of the London session? Who cares? You mean the overnight high and low? Okay. To me, that's irrelevant. The overnight high is 90, 59, 74, 75 in the S&P. I don't care. We're going to blow through that anyway, or we're going to hold it, and then it becomes important. So I want to see what the highs and lows are. I want to see how the market moves during RTH, during regular trading hours. I really,
Yeah.
really don't care about the overnight high and low ever, or the Asian session high. What is the Asian session? We
Well,
trade
so we
US.
differ a little bit. I like to look at the London initial balance just to see if it's truly going to set the pace for the day or not. Oftentimes it doesn't, and a lot of times it reverses, but sometimes you could tell it's going to just set the pace for the rest of the day. That's been my experience anyway with it. But
All right, so give me an example. Like, uh, um, uh, what would that be now?
so all right, here, let me pull up a chart and we could talk about that and see if I have it. Yeah, I do have it on here. So right now. I mean, and this isn't surprising today. Here's the E-mini S&P. This is the 30-minute chart, and I have that London initial balance kind of highlighted with these purple lines, top to bottom right
Right, I
here.
see it. Yeah, I see it. But what are the prices?
So the high 59.74
Okay.
and the low 59.67. So a
Okay.
very tight range.
Okay, that's good. Okay, that's interesting. So we're going to trade the breakouts of the IB, right? We're going to, at least theoretically, that would be the idea. Okay, I can see that. So I'd get long someplace above 59.74, and because I know where I'm wrong. I know that if we get back inside that high volume, no, then we're out, right? That would be the idea.
Yeah, and just kind of a general like, all right, once we had a nice orderly rally overnight, in the Globex session. We hit the London bell rings, and all of a sudden that orderly rally kind of stopped, and we generated a point of control here, which is pretty prominent on the volume profile at 59.70. And so now it's like, all right, price happiness. The London traders, decided just to let's pause and wait for non-farm payrolls, and I think that's where we're at right now.
All right, so that's interesting. Yeah, okay, I can see that. Now like I don't necessarily care about it because we'll do more volume in the closing range than we did overnight. We've done 97,000 contracts. We'll do that in the last minute of the day, or the last 30 seconds. So I want to trade when there's the heaviest volume. Yeah. And for me, my whole life, I really don't care much about buy. No, not my whole life. I was a market profiler for quite a while, but I don't care about volume in a trade, and I don't care about time in a trade. I trade futures. So I don't care about how long it takes me to achieve my swing target. So the only thing I care about is price.
Yeah.
And managing my expenses, and then staying out of the way of the market and allowing the market to work. Yeah. And for me, Jimmy, I need to keep it simple, so my I tweet about this all the time. I need a trading methodology that's consistent, repeatable, and scalable. Something that I don't think scalable is an actual word, but I need something that I can size up, size down, and decide not to trade. A large part of that is going to be obviously discretionary. So it's very hard to codify my trading method, because I might go from a 4 lot to a 40 lot, or I might just not trade. Like Rob in the chat said, been a fabulous week of trading, capital preservation. I don't see it that way. I think that this week was tough, except for yesterday. Yesterday was a very tradable back and forth wiggly day. You got, like 4 or 5 or 6 or 7 different 15-point rotations in the S&P. And that was, you caught that was good. Monday was okay too, but I have found this month, with the exception of a couple of days, difficult. So what does that mean for me? My whole trading strategy is basically a swing. Is basically a swing in a trend trading strategy, right? I want to catch the swings. The swing in our case that we've been talking about for the last couple of months is 56.17 in the quarterly pivot, up to 60.08. That's where the swing is completed. Now we have very important macro levels along the way. 59.49, the yearly opening range, which I've been talking about, 59.29, 59.10, 58.70-ish, 58.40. All of these levels are very, very important.
Okay, so let's pick. I got the PAX lines on the chart right here. Let's kind of pick these off one at a time. I mean,
sure.
Let's start with, we're trading right now at 70, right? 59.70. So we have that 59.49 level that you just mentioned. Why is that significant?
That's where we opened. That's steady on the year. 59.49 in the S&P is steady on the year.
And then, okay, so then let's move up to, because let's kind of straddle the price.
There's one other part that I want to mention
about
that though. So 59.49 is steady on the year. That's where we opened the year. That was the very first. There's no range. There's no 30-second range when it comes to the yearly open. There's the way that I calculate it is the opening print of ETH, and then the opening print of the regular trading hours, in the next trading day. So the yearly opening range, as I see it, most important price is 59.49. The second most important price within the range is 59.6775. That's the opening print for RTH.
Wait, give me that level again. What was that?
59.49 is
Yep.
the most important part of it. But the second other important part, but less important in my mind, is 59.67.75, right where we're trading. That is the opening print for RTH. So that's the opening range, the yearly opening range, 59.49 to 59.67.
All right, I'm going to put another PAX line on the chart right now. I got it. All right, so we're right there right now. We're driving to that that 59.80 level as well, and you could you could even see like this. This is where I would draw my rectangle. So I like to draw rectangles to give me an idea of where resistance or support starts. And so it's real. What I would do is I like to touch the top of the highest body of a candle in recent memory and just kind of drag it across and say, okay, this is an area of interest to me. This is the area of resistance. And that's right at your 59.80 level.
Yeah. And so, if we're trading that swing now, let me see if I can weave this in. Well, so from a macro sense, the bigger swings, 56.17 from the quarterly pivot. That's a quarterly pivot all the way up here. So now within that, up to 60.08, and I showed the math yesterday how I came to that level when we made the low of 58.34. I showed that math then. 60.08 was going to be the upside target, and that is the high. I mean, you can go back and look at my Twitter feed. Once we got above 56.17, we closed twice. That is going to be the swing target. Above that is 64 even. It's the next ladder rung. Anyway, now let me see if I can weave this in. I'm going to use that. So that's the yearly opening range, 59.49 to 59.67. If the market isn't, just like during the day, if the market is inside of there, I don't really want to trade. If we're above it, I want to be long. If we're below it, I want to be short. Now, just like the daily opening range, first 30 seconds of the day, I want to be long above it, short below it. If the market is inside of it, I don't want to trade it. Now, if the market continues to cross it back and forth, I don't want to trade it. That's why I don't see this week as very easy, or the last 2 weeks or 3 weeks, because all we're doing is churning this level. I don't want to be involved in the market when it's churning the level. I wanted to be long above 59.17. I really wasn't. It was a reluctant rally. None of that was easy. A lot of gaps, a lot of stop out, reluctant meaning you buy 57 evens, the market rallies to 30, comes back down, stops you out. Next day, we're at 57.70. You buy 70s, market rallies to 58.10, you take profit, comes back down, stops you out. Next day, we're at 58.40. So it kills positions, and that's a reluctant rally. There's no momentum behind it.
Yeah, Monday we wicked into the zone. Tuesday we spent most of the day in it. Thursday we spent most of the day in it, and today we just transversed it.
Yes. Now at this point in my life, I don't want to trade these 15 handle, 30 handle rotations in the S&P. I'm done with it. I don't need it, and I don't need the tension, the aggravation. But careers, that's how you build careers.
Yeah.
You build careers on those 15 handle, 30 handle rotations. And that's those 15 handle, 30 handle rotations that you catch while those swings, right? Okay. Those intraday micro swings will get you to the bigger macro swings. That's the weave that I was trying to make earlier. Yeah. The opening range, small micro swings, 15, 30 handles that I'm not so interested in anymore. Those are what actually, not only do they fund those bigger swings, but they also give you a very clear, direct, and consistent, repeatable, and scalable way of looking at the market that you can protect yourself in and give you major trading profit in that you can reset, keep building. The other shoe doesn't drop. I just made 100,000 packs. I hear this all the time. I'm so afraid that I'm going to lose it all. As long as you reset that money, you protect that money, preserve and protect that capital preservation Friday, you make 100,000, that's great. But now you need to protect it. So I'm not willing to risk it, but I'll spend 1,000 or 2,000 of that to make another, whatever, right? Or if you're trading minis or if you're trading micros, it's all relative, 10,000, 5,000.
Yeah. So, right. And this is at this stage in your career, this is how you do it. This is your comfort zone. This is what you're good at. And somebody might have, these 15, 30 points.
Go get them. You'll make a ton of money. Look, 2017, the market crept up. 15 handle rotations. I caught those 15 handle rotations, and those 15 handle rotations funded the fourth quarter of 2018, which was my first really, really big quarter on the screens.
Okay.
2019 crept up. Those 15 handle, 30 handle rotations funded the gigantic trading profit that I had in 2020 because of COVID, right?
Yeah.
Same thing with 21, 20 funded 22. And then last year kind of sucked. You know, what didn't suck? It was good trading, but that funded this great year. So, you know, do I need to catch these 15 handles? No, I don't. But you guys can, and it's clear and it's precise and it's there for you to take. And that's how you build your career.
So
one trick at a time.
In the early aughts, I guess they call it the aughts, right? 2001, 2, 3, and 4. There was, you know, a 30 handle move would have been like your hair was on fire. Like it would have been a big move. And now it's like it's nothing these days.
Nothing. And well, and don't forget the contract was $250 a point too.
Yeah.
You know, so it was a bigger contract. The 30 handle move, which was huge then, would be more. And we traded in the pit, so we traded bigger, and at least I did. And NASDAQ was $100 a point then. You know, when I first started, NASDAQ was $100 a tick. It was could you guys imagine, you know, trading the NASDAQ, especially after the tech, you know, in the tech run up. You know, I told the story the other day. I posted the picture of my daughter the day that I lost $1.5 million. Now, that was January 3rd, 2001. And the very first trading day of the year, Greenspan cut interest rates by 50 basis points in the middle of the day. Nobody was in the pit but me and Jimmy Lafredo from Susquehanna. And I was short 28 NASDAQ. That's 28,000 every 10 points. We rallied 26% in 5 minutes. And I bought the high to get out.
Yeah. Yeah, you get those black swan kind of category events, but let's toggle over to the micro NASDAQ. Do you see anything different here in the micro NASDAQ?
NASDAQ is much stronger than the S&P. So the NASDAQ the S&P is still churning. We're 20 handles above it, but we're still churning the yearly open. The NASDAQ cleared the yearly open last week, I think. Earlier this week. The yearly opening range for the NASDAQ is going to be 21,269. That's the opening print of RTH, 21,269. And then the top of that is 21,347, 21,269, 21,347. So that is, you know, long above, short below, right? Anything in between that, no gracias. And we cleared that. So that like now, it seems like the NASDAQ is leading to the upside. But yesterday, when that stuff was breaking between Elon and Trump, the S&P was getting slammed, and you know, it looks like the S&P is leading to the short side, and then it just, you know, comes to a screeching halt, and we sit. So we sit. Yeah. So 21,000, 21,269 to 21,347 yearly open range. Important levels between that are going to be 21,517. 21,639.
All right, hang on. I'm old. I go slow here. I got 20. I got 21,517. You said?
Yes, 21,517.
All right. What's the next one?
21,639.
All right, I got it.
And then the next one is 21,690. 696 is the exact price.
All right. I got some more PAX lines here as well. I mean, we're just, look at that. We're just driving right up to your 21,696 level right as we speak.
Yeah. And that seems to be kind of like where we're, you know, I don't know, like the where we're bouncing around at. And then above that is 20,000, 21,947. I think that's around the high. We made the high of 21,935, but 21.
You said 937, right?
Yeah, 21,947. 21,947.
Okay, so it's about 10 points higher than that wick.
Yeah, just a little bit. So that's you know. All right, now the S&P. Here's another point that I wanted to make too, Jimmy. Is the S&P made a great high at 60. Well, it's a double. I don't think this is going to be industry wide accepted, but it's a double top. 60.08 was the high earlier in the week in the S&P in ETH. 60.09 is the high of RTH yesterday. So, a double top. I mean, not really, but in the way that I look at things, it is. That is a very, very good high in the S&P. NASDAQ also made a great high, 21,935. Now, will those be the high? I don't know, but they're a good tradable high. So 21,935, 60.08, 60.09 is both. They're both good tradable highs. Now, between the macro zones in the NASDAQ, 21,639, 21,696 in the S&P, where we are around the opening range, this is a non-committed market. We're churning very quietly with very low. Here, didn't I just say I didn't care about volume, but very low volume up here, and we're not going anywhere. So flat, watch, take those 15 handle rotations that turn into 30 handle rotations that ultimately turn into big, gigantic swings.
Yeah. So interesting. Your levels are really nice. So I put my rectangle at the top. And it's like, all right, we don't have a body of a candle above this area here. That's approximately 21,768. So that's resistance. Now we have some wicks, some probes, as Tom Schneider would call them. And sellers pushed us back down twice, 3 times if you include this wick as well. And then I just slapped on a real quick fib. And I'm doing this because I'm not the only guy on the planet that's throwing this fib on. And I used the wicks. I just went low to high just to kind of see how far we've retraced from that high print. And we're right at that 38.1%.
Yeah.
So, that's just right next to your 517 level as well. So that's close enough for the micro NASDAQ. So that kind of reinforces the kind of, important level that we have there.
These prices, you can write all these prices down because they will not change. They're set. I don't rotate them for rollover, which we should kind of mention a little bit because we start it next week. Yeah. We should actually talk about that after the number, but we are. It's important that we do. Anyway, so I don't adjust these prices. They're 21,937 is going to be a big level for me all the time. 21,690, 21,639, 21,517. Those don't ever, 20 years from now, we come back to this level. Those prices will be important. Highs and lows, those change, but these prices won't. 21,935 may not be a high for very long. So, it ceases to become support it ceases to become resistance or support on the way back down when 21,937 will always be an important price in my number. It's all math. It's just based on math, which is exactly how I came up with that 60.08 level. Just simple Fibonacci math. And I can go through it real quick if you want me to give it to you.
Well, hang tight though. JT says, Pax, if you don't care for volume, how do you know when to roll over? Go ahead. I know the answer, but go ahead.
That I may have overemphasized the fact that I don't care about volume. I don't care about volume in a trade, So if the top of the opening range is 59.70 and I buy 70s, I'm not looking at the volume. I'm looking at the size of the bids and offers in the DOMs just to make sure there's liquidity, but I don't care about the volume carrying it through. During rollover, Jay, I don't roll until volume is heavier in SEP. So my front end, Ninja may roll us on, Monday, but if, or Friday, but if volume is not heavier in SEP until Tuesday, well, I don't trade those days, but I'm going to base everything off of whatever's heaviest in volume.
Yeah, and so just to kind of graphically kind of show that what I did on my market analyzers, my quote board on the left. I have the June mini S&P contract up. We're trading about 103,000 contracts so far plus. And then I also added the September contract, right? And then it's only 2,400 contracts. So clearly all the volume is in the June contract still. Now, as we get closer and closer to rollover, this ratio is going to change. And eventually the September contract is going to have more volume. And what Pax has said is exactly how I feel about it. Is, rollover is it takes some time for this whole rollover to complete before the June expires. So you want to look at that volume and trade the one with more volume because it's better liquidity. The bid-ask spreads are better. The pricing is better. So that's how I do it. I just throw it up here on my just to keep, just to look at it.
So there's a 55-point premium in SEP to June. So SEP is trading at 60 quarter. June is trading at 59.71. Those gaps become important, and we'll talk about the rollover gaps. They're actually narrowing a little bit. Most of my career, the rollover gaps have been just a couple of ticks, like a tick, 2 ticks. And as rates started to go higher, then the cost to carry the forward contract has become greater. So we've, the spread has gone out. I think the highest we've seen in the last year or ever was in the last year when it was 65 points, but it's come in to like 52 points. Now, anyway, the point is that I'll trade SEP until I want to trade. This is another reason why I don't trade NASDAQ anymore. There are very few, if any, independent traders for their own accounts that have traded as much NASDAQ with their own accounts in the world that have actively trading as me. There aren't too many people that have done that. And I haven't traded the NASDAQ as a primary market since the teens. Why? Because the S&P is got much greater open interest and much greater volume, and I'm much less likely to get caught in the chop with the S&P. Now, the NASDAQ gives you bigger swings. We'll overrun its targets. I think we're up 25% versus 20% from the lows, or around that. So that's nice for you younger traders that don't care about the job. But as I get older, I don't like that back and forth. I like to keep my expenses smaller. So I trade the market with the highest volume.
So we are gonna get some data here in a minute, and Shai's gonna come in and walk us through what it means. But before we do that, I do want to shout out to Stowe, Order Flow Labs Stowe. He ponied up. You could see my ex tweet this morning. He ponied up for the trading challenge that we had, and the best thing that he sent, it might have been the pierogies. I don't know. I haven't had them yet, but my Mr. Rogers coffee cup. Apparently, Mr. Rogers is from somewhere in the Pittsburgh area here. I just want to let's see if I can get that in front of the camera. Stowe, thank you, brother. I appreciate that, man. You went way overboard. It was unnecessary to send me this stuff, but this care package he sent me, packs was. What a great guy. What a great guy.
That's really cool. I want a Mr. Rogers coffee cup. I'm just kidding. I don't drink coffee. I drink protein shakes with caffeine in it. Let's go. And creatine.
No, well, no. So yeah, Stowe is also talking about his new protein drink with coffee protein and protein powder and something else. I can't remember what else he's putting in it, but
there you go, Stowe. I didn't start doing that stuff until my late 40s. You guys have to. I didn't start optimizing my health until around 50. That is one. I don't have any regrets in my life. That's one that I wish I'd have done a little bit better, but it's all part of my journey. But well done to all of you younger guys that are actively taking care of your health and optimizing it.
Yeah, no, it is, man. It's a good thing to do for sure. You have more energy in the day. It's one of the things all traders should do is, just, don't come in hungover. You could do that Saturday. Don't come in hungover. Get your exercise in, get your adrenaline going, all the chemicals going on in your head, make it nice and clear.
Look I can give you the math and I can show you how these levels work, and that's all well and good. And I can give you the high and the low of the year and tell you this is going to be the high and the low of the year, and most of you are going to lose money. You are going to puke up all over the screens exactly what you think about money, exactly what you think about success, exactly what you think about yourself. If you're not a good healer, if you're not a good forgiver, if you are not good to yourself, you don't give yourself grace, you won't make money. If you don't take care of your mind, body, and spirit every day, you won't make money. You won't make money long term. You can make money, anybody can get rich, but you'll eventually blow it up. So take it easy. Take it easy.
Yeah.
Mind, body, spirit, man. Optimize it. It's a long game.
Absolutely. For sure. And have a nice pup. I got a new puppy now, so I'm happy.
Oh, that's awesome. Did you guys take the dog?
Yeah, we flew to Tucson, drove the 3 days back with this pup, and I was like not happy about it, the idea of it. And now I'm just the happiest possible.
Oh, that's awesome. He captured your heart.
Yeah, for sure. All right, Tracy's here. What is going on, Shai?
Hey guys, happy non-farm payroll day.
Let's go, Trace.
So we have expected or the survey says 126,000 prior was 177,000. Unemployment rate is expected to hold steady at 4.2%, and average hourly earnings month over month is supposed to be plus 0.3%, which is higher than the prior at 0.2%. Now, the survey is kind of the average, but looking at all the different banks and everybody's thoughts on this, it's all over the place. You have Apollo at like 64. You had Bloomberg 2 days ago said it was going to come in hotter than expected, and then today they've changed their mind and it's not. And we have the numbers. Non-farm payrolls came in at 139,000, expected 126, so came in a little hotter than expected. 4.2%. Unemployment rate holds steady. Average hourly earnings came in hot as well at 0.4% versus 0.3% expected. So came in hot.
Wow.
Bonds immediately sold off and equities were immediately bought.
Yeah, I mean, I just have that chart up there. But Chai, let me ask you this: it seems like all the numbers pretty much were within the really large consensus range that we were forecasting, except maybe average hourly earnings. Why do you think the consensus range was so huge?
Well, you mean the difference between
Yeah.
all of the guesses? I think a lot of people, I think a lot of banks, particularly a lot of analysts, are surprised that these tariffs really haven't dampened the economy yet. Now, if you remember, this report also came in after we scaled back the China tariffs, right? From the initial 145% into, I think, 50% it was. And so that could have maybe added some enthusiasm, I want to say, for businesses that are hiring. And it felt like it, at least we were in a better place as far as tariffs were concerned. So that could be partially part of the reason why we're seeing better than expected numbers.
Totally makes sense. Thank you for that, Shai. Is there any other numbers or anything we need to worry about today?
No, you are good to go with non-farm, and the rest of the day is smooth sailing.
Hey, Trace, what's this mean for next week? Not next week, 2 weeks from now. What's this mean for the Fed in 2 weeks?
Definitely wait and see. Because if we're not seeing any kind of weakening in the labor market, I mean, we did kind of see a little bit on the ADP number earlier this week, but as far as the Fed is concerned, it's above expectation. Yes, it is lower than the prior at 177K, but, we're not seeing, this is not anything that would cause them concern at this point.
Okay. So next question, does this put added focus on CPI next week, or is CPI going to be a little bit less important than non-farm?
I think it'll be just as important.
All right.
I think it'll be just as important. And next week we have Joseph Wang, who used to work at the Fed. He will be with us on CPI day. Yep. So
I listen to everything he puts out. If you guys don't listen to everything Joseph Wang puts out, then you're missing out. He's as good and as smart as Zoltan Pozar when it comes to the plumbing of the Fed. It's very important to listen to him. I can't wait for that show.
So,
hey, one last question on this number, Shai, real quick. Scott K in the stream says this is with reductions in federal employment. So is there an added extra impact there?
Not really. I mean, changing private payrolls, non-government was 140, expected 120.
Okay.
So came in hot.
Yeah. Awesome. All right. Shai, thank you. Appreciate you. And looking forward to our wrap up later on this morning.
Love you, Trace.
You got it. See you guys.
Wow. All right.
I said, love you, Trace. You gave me, yeah, you got it.
Well, I don't know. I mean,
So this sucks. I don't, you know, I don't, it doesn't suck. From a trading standpoint, I was hoping for some volatility and I was hoping for some breakout. And, you know, if we're wait and see, then the reluctant rally continues, you know, unless we can clear, what I'm hoping for, Jim, is that once we clear 60.08, 60.08 to 10, that there'll be new momentum to the upside, that it'll run from there, you know, and the bonds are selling off though. I mean, is this a flight to quality again? You know, sell the bonds, buy the equities. Gold is selling off a little bit. Gold is at 381. Not really. Gold has just caught an offer. It was at 33.81. Now it's down to 33.77, 78.
Yeah, let me, I'm trying to toggle between my charts here. Here we go. You know, the bonds, look at that. I mean, it did fall out of bed right here. And we are back to that normal inverse relationship between the S&P and the bonds. About 6 weeks ago, it was not the case. They were marching to the same drummer, and it was positively correlated. And now it's back to textbook, right? Negatively correlated.
Yeah.
For whatever reason, you could say, you know, you could just say it's, you know, a regular 60-40 idea. I don't know, but this is a big sell-off right here in the 30-year. We're back down to a 112 handle. Yesterday we were flirting with a 114 handle, and now we're back down to a 112, 22, 30 seconds, and we're approaching that S2 level on the daily pivot. Mentor Q's one-day min, which is a big target for me, as well as that
What price is that?
That price is 112.18.
Oh, yeah. That's a big level. Underneath 112.18, we got another point. But 113.24 is the huge level that everybody needs to pay attention to in a 30-year bond, because that's steady on the yearly opening range. And now we're a point below it. So the bonds are selling off underneath the yearly opening range. You know, that had, for most of our lives, Jim, for most of our career, from the aughts to the teens, well, from the aughts to the teens to now, the bonds had traded in that inverse relationship, you know, the flight to quality, flight to safety-ish, right? Now, you know, remember, guys, when I talk, I'm not an analyst. I'm just you know, nobody's putting on me on CNBC because I'm just a trader. I'm not an analyst, and I don't sound smart when I talk. I use words that are important to me, and that makes sense to me. So anyway, the point is that seemed to change in my mind in like 2018 with all those, you know, all those years of financial repression, from, you know, QE to, you know, to when the Fed started. That's when I started to notice the NASDAQ and the S&P or the indices and bonds changing that inverse relationship and starting to move up together. And you know, so now who knows?
Yeah. No. And by the way, Deli is in the chat. Deli, good morning. Good to see you. He says, quote unquote, I talked about this yesterday. The bonds were expected a soft number. I think I'm just the opposite, and the bond longs got caught off guard here. They sure did.
Oh, sure they did. Anybody picking a bottom in the 30-year bond right now in the middle of a bull market or bear market is I don't know. You're fighting the tape, I think.
Yeah. No, I hear you. I hear you for sure. By
Picking
the way,
picking the top in the indices.
by the way, another important thing you should know, and that is Shy in the chat says, love you, Pax.
Oh, I know that. I was just I love Tracy. Tracy's the best in the business at what she does. Nobody better.
I agree with you, man. How lucky am I? I get to hang out with her every day.
Yes, truly.
For sure. All right, let's kind of move around the cabin a little bit here. I'm just checking where we're at on the time. So we talked about bonds a little bit. We talked about the E-mini S&P, NASI. Any other markets that you think are important that we should look at? I mean,
Gold.
Gold. All right, let's do it.
I think crude has almost become irrelevant. Crude is just waiting and bouncing in the range. But gold is a super trade, and also very gold has been a great opening range trade, and it's just a great trade in general. So the two levels to pay attention to in gold, we've cleared them, but that's going to be 32.96.
Hang on a second. Let me get some PAX lines on here.
That's the quarterly pivot for
give me that number again.
32.96.
Okay, got it.
Then the next quarterly, the old quarterly pivot, the pivotal price in this area is going to be 33.32. I tweeted about that 3 weeks ago or a month ago, and have been tweeting about it since. 33.32. These are gold prices that also don't change and don't adjust for any reason.
So real quickly though, just for the people who don't know, when you say quarterly pivot, what are you referring to?
I don't want to talk. I don't want to go too far into that.
Okay.
But it's just for the whole quarter, for the life of the Q contract. CEQ is the front, or Q is the front month, right? So what is that, August?
Yeah, August, yeah.
So we're trading Augie gold. I am going to be long above 32.96 up to 33.32. I'm going to be long above 33. I'm going to take profit at 33.32. And once we get above 33.32, I am going to buy more significantly up to 34. I think the level that we were talking about yesterday was 34.08. Now that'll change. 34.08 is not a macro level. 34.08 is just a resistance level. And then the next macro level on the upside is 34.68, and then the old high of 35.09. So it's 32.96 long there, take profit at 33.32, and then you've got to swing to 34.08.
Hang on a sec. Let me catch up to you. 34.08.
Everybody else, all the younger traders always talk about this level and that, they don't talk about specific prices. I talk about specific prices, and I talk about them too quickly. So
that's okay. That's okay. I'm catching up. Okay. So I've got that. I have that 34.08, which actually is a really nice level, because it's going to line up with this week's resistance level.
Yeah. That's all it is. It'll change, 33.32 will not. 34.08 will change because it's just a resistance level.
Yeah.
And then above that, though, we've got another level that won't change, or what I call a macro level, is 34.68. So 34.68 is going to be the next level that won't change. Now, there's a trader in my group. He's texting me right now. Greg Donahue, short gold from yesterday's opening range, and I'm not quite sure what that was. And I asked him when we were trading, I asked him, "Are you still short?" So what was yesterday's opening range? So my recommendation to him, or not recommendation, but what I told him that I would do was that if I was short gold, was I'd keep it until we got down to 33.32, and that would be what I call a flattened zone. He's short from. Did we really open? Yeah, no. He's short from 34.40. No, he's not. He's short from 34.06.
Okay, that makes sense. That makes sense here, right? Because we printed that at 06 number a bunch of times this week.
Yeah. So he's short from 06, and he's paid for his trade, so he's removed his risk. He's taken profit down to, I think, 34.80 someplace, or 33.80 someplace down there, and now he's looking for 33.32 to take his money into flatten. And if we get below 33.32, you can get short down to 32.96 and flatten. We get underneath 32.96, sell them with both hands and feet.
Well, yeah. So, okay, this is why I love your lines, because they just match up so nicely with my rectangles most of the time. Let me draw that. Let me draw this.
It's all math.
Yeah, I mean, support, boom, right there at that 94 level, 95 level you just mentioned. Resistance, 34.08, which you just mentioned. And then the other thing I did, I had this short-term high here, and that's around 33.65, and I drew a rectangle there and said, okay, we haven't had a body of a candle close, still not, and then boom, we had that monster green candle. And so at that point, I drew that rectangle, and I kind of threaded the needle a little bit. I moved it across. I learned this from Jack Bros back in the day. We've talked about this before.
Yep.
Resistance becomes support.
Yes,
resistance and vice versa. And so we're right at it right now. We're right at support right now. They got that 8 EMA also right there, and we have the midpoint. That white dotted line there is the midpoint of this monster candle, right? It's called the piercing line in the technical analysis handbook. So this is a critical level for gold, I think.
Yeah, critical.
Yeah,
critical. Under here, we've got 200 points. Over here, we got $200. Over this, we've got $200.
Yeah. It's been crazy. All the metals have been crazy. I mean, me and Tracy have been talking about them all week. I mean, let's just pivot over to silver. I mean, silver is just, forget about it. It's on a tear. This is a bullish market. I don't have any PAX lines on here yet, but look at that. A huge benchmark candle. couple days of pause, another huge benchmark candle, and then we're off to the races today.
Silver's making a new high for the year, aren't they? Oh yeah, they are. Yeah, silver's flying.
Oh yeah, look at that. I mean,
But silver has been so silver has been so depressed, like artificially depressed. I sighed when I thought that, because I thought, okay, here I go. I'm going to sound conspiratorial now, but I think silver ought to be priced, up in the, going back to the Hunt Brothers high.
yeah.
I mean, really, shouldn't it? And if it was in line with gold, who knows where that would even be trading? I mean, gold's got, or not gold, but silver's got a lot of upside room here.
Yeah, I mean it's a dual purpose asset, right? It's a flight to quality perhaps, but it's also an industrial metal. So there's a couple of reasons why things could move here, and this is just a really strong move up.
Sure enough. Do you want some gold, some silver levels?
Heck yeah.
Okay. So let's see. Oh man.
I mean, who would say no to that, Pax? No one.
Well, I don't know. People that want to keep it simple might.
No.
All right. So we're trading at where are we at? 36.
We're at 36 spot 325 right now.
All right, 30. Yeah, there we are. 36,325. I had to put it up on my DOM. I when I'm looking at prices, I'm looking at DOMs.
Yeah.
I don't look at. I'm not a. I just noticed that the bonds had traded 112 spot 21 traded 7,777 times. That's another time that I care about volume, is when I see 3 or more 7s in a row. Then I know, oh, this is going to be a good day. If I see 6s, 3 6s or more, I'm not trading. I would turn around and, like, if on my trading cards in my hands, if I got the number 666, I flattened up and I left.
Man, you are superstitious, but that's okay. That's okay. Let's get some number. We'll go to. I'll pull up a trading ladder in a minute. Let's go ahead and let's get some lines here for silver.
So 36. Let's see. Let me calibrate. Okay, so where we are is 36.4. So 405. So right where we are, 36,405.
Got it.
Above. Let me see. My eyes are bad. Above that, up to 36,513.
36,513.
Yeah.
Got it.
And then above that, 36. And then it's got some room to run. 36,804. Oh, that'd be good. Oh, I got to start paying attention to silver. It could make it there.
Just kind of show those a little bit on the chart. Yeah, I mean, these are some good upside targets. If from a technical analysis point of view, when a market's making its all-time highs, there's not a lot of tools you could use, like from a fib retracement point of view, or different things like that. And you can use fib extensions, but those are a little wonky. So these numbers really give us really nice targets.
Yes, they do. Now, what I referenced earlier in regards to the Hunt Brothers high is in 1980, the Hunt Brothers tried to corner the silver market.
Yeah.
And they ran silver up from like $8 all the way up to 41.5. So that's the old Hunt Brothers high. We took that out in 2011, I think.
Yeah, we had a 48.49 print at some point. Yeah.
49.80. So we took it out, ran up to 49.80. So, I mean, I really do think that silver is targeting the old Hunt Brothers high.
All right, we'll see what happens here. I remember that 2011, we had a customer who was long it. He's from Canada, and he was up 7 figures.
Did he keep it, I hope?
No.
I hate those stories. I hate that.
And part of it was, he said, well, I need to make more because I paid so much in taxes. This isn't enough. And I thought, you're crazy.
Well, there's a guy who didn't properly fund his tax account, probably. That's a huge aspect of Capital Preservation Friday, is or capital preservation in general, is knowing how to manage your trading accounts. And we've talked about this before, Jimmy. You don't ever see anybody talk about how to properly manage your tax. Not only your trading your trading accounts, but also your tax accounts. I'm not a CPA. Contact the CPA that understands and knows section 1259 of the tax code where futures are taxed. Okay. 60-40 long-term, short-term capital gains. But you've got to, if you make $10,000, take 35% of that, put it into a separate account. If you bank at Chase, and take the money out of your account, money that you made and that you leave in your trading accounts, you're just asking to lose it. If you want to build up your trading account so you can trade more, that's a business decision that you've got to take in a variety of factors. Don't trade more just because you've got more in your account. Passport to poverty, recipe for disaster. If you make 10 grand, take that money out and then take 30 to 35% of it and fund your tax account. You're going to overfund it, because the 60-40 long term is going to be 20 to 24% in taxes if you have an aggressive attorney around 20 or CPA. So anyway, the point is that don't touch your tax account. If you bank at Chase, open up your tax account at Bank of America and don't ever touch it. Every time you take money out, properly fund that tax account. At the end of the year, you should have enough to be able to pay your tax bill and then some. Take that extra and roll that into an IRA, roll that into, some sort of an investment vehicle. Just forget it. Overfund every year, roll the rest into T-bills or something. Just don't go blowing on supercars and supermodels and super houses. Just, I had dinner the other night last week with 4 super successful traders and brokers from the pit and the floor that I'm still very close with. The thing I tweeted about this, the one thing that we all have, or we have a few things in common. 3 of us have been married 20 plus years. All of us have raised very healthy and tight knit, loving families, or in the process of them, like me. And all of us kept our money. Well, I didn't. I went broke and then I recreated it. But and we all live in the same homes that we raised our family in, and none of us own supercars. I've got beautiful cars. They have nice cars, but I don't have any, supercars. The point is that you save and protect your capital in the macro sense. In the micro sense, preserve and protect your capital today. If you had a good week this week, take the money out of your account, pay yourself, do something good for somebody you love, promptly fund your tax account, and preserve and protect that money. If you struggled this week, do not try to make it back today. You'll ruin a long weekend. Maybe there's momentum above 60.08. Maybe we just bounce in the range and you're done at 9 o'clock. Don't let your expenses exceed more than what you can make at the pay line. And you will be here for that volatility that we had last year in the beginning of the year. You'll be here for those huge trades.
Yeah.
Make sure you survive.
I know some successful traders that, they treat it as a payroll. So every other Friday, I'm going to pay myself enough to, that 35% that you're talking about. And then at the end of the quarter, I'll do the math and say, okay, is it time for my quarterly bonus? Or maybe you had a bad quarter and you don't get the quarterly bonus. But that's kind of a business mentality of how to handle your money.
Yes. Right. 100%. Jimmy, you can't say that any better. This is a business. I can't winning. I don't win money. I never win. I don't have winning trades and I don't have losing trades. I'm not a loser. I spend money.
Yeah.
I have expenses or I earn money and I need to pay myself in quarters that are good. Now, my wife was a clerk on the floor for, hold on, Ant, I'll answer that. But my wife, Jen, was a clerk on the floor for 18 years. She managed accounts for brokers and traders. Yeah. She manages my accounts. I don't want to be mindful. If I made 100 grand and she took it out of my account, I don't want to think in my mind, God, I'm light 100. Gee, I got to hurry up or 10 or whatever. Yeah. I have to make it back. I don't want to think like that. So she manages all my accounts. She gives me my positions. If I ask her for a P&L, she gives me my P&L. I don't have my P&L up on my screens. She does that. So I'm not mindful of my P&L or my money. I am mindful of the market and what my job is. What's your job today? What is your job? Is your job to catch every little 5-point wiggle and to scalp this shit? If it is, good luck to you. Because this is a long-term game. Take it easy. Take it easy. Yeah. Look for these swings, intraday swings, turn into larger swings, turn into trend trades. If you don't find it today, keep your expenses tight and go play golf.
There you have it. So, Pax, I threw up a treasury bond trading ladder. It's a little hard to see, but
I got it.
Yeah. So it's you were talking about the 7s versus the 6s right here, and so I think what you're referring to is the volume in the offer, the volume of the bid, And is it going to be 700 plus, or is it going to be 600 plus? What's the level?
All right. So on the bid side, if you look at the 10-year, it's 1,000 up and sometimes more. The 30-year used to be like this, but now it's 1,000 up, 500 up. That's good. So if you're trading bonds, let me see what the opening range in the bonds were today.
Well, so I just toggled to the 10-year. We could talk about 10-year.
Well, let's talk about the bonds because I know it better.
Okay.
I know that the 10-year is more important to the market. But I'm conditioned. I've been taught to, and I'm conditioned to trade and look at the 30-year bond. So it's just easier for me. So the bottom of the opening range is 113.10. Okay, that was before the number. So you sell 113. You're short theoretically. You're short at 113.10. And let's say we're talking about the metric Q level at 112. I think it was 18, right? So we're right at it. Now the bid is 100. The offer is 79. Now it's eight. It's 8 offer. There's 200 offered at 8. If we're in the pit, it would be 200 at 8. So somebody would say, what are we? Sep. And I'd say 7 offer, 6 bid at 7, 6 on 700.
Yep.
207. Okay, so 7s are trading. If I wanted to be short, I'm going to sell 17s, and I'm going to have plenty of chance to get out for a scratch. And that's the edge. The edge, when people talk about edge, nobody takes the time to define it. When you talk about edge is the ability to be able to scratch a trade. That's the edge. So if I sell 17s and now there's 17 offered, 500 offered at 17, I've got the edge because I can turn around and buy that, right? So anyway, Anthony had asked me what I think about the bond sell-off. It's worrisome. It makes me less reticent to want to trade. It makes me less eager to trade the indices, especially as we're at the top of this range. I'm going to wait until we break out of this range. Period. I'll get long above 08. I was long going into yesterday, and I flattened up, thinking that this volatility can kill us.
Yeah.
The market, as we've discussed many times, does not like uncertainty, and I think that we're headed into a weekend of uncertainty. What's going to happen between Musk and President Trump and Musk? What's going to happen with Russia, Ukraine? Please pay attention to that. That could be ugly. What's going to happen with us in Iran? I mean, there's all kinds of uncertain things, let alone tariffs. And, July 13th, I think, is going to be the 90-day tariff ending with China. Who knows? Uncertainty. So we're not breaking out of this range. The bond sell-off is starting to worry me. Are we into a flight to safety? Is that going to propel us higher off the number? Or is the bond sell-off, is it going to break something eventually? Higher rates are going to eventually mean that, it's going to be harder for the market to continue to rally. At least that's my thinking. Now, the market may do something completely different. It can remain irrational longer than I can remain solvent. So I'm going to trade the price action as it is, not as I think or want it to be.
Got it. That makes sense right now, for sure.
Or not.
The news cycle doesn't help either.
No, or the tweet cycle.
Yeah, the tweet cycle. That's a good one. That's a good one. All right. Well, we'll see. This is an old cash price right now, but yeah, I mean, big move on bonds for sure. We'll take a look at the 10-year just really quickly here, and I just kind of want to make the point that you made about the volume here. This is going to be systematic price behavior between the two. They're looking similar, but when I pull up a 10-year note, ZN is a symbol. Ladder. I want to look at the difference.
Look at the size and volume.
Thousands.
Thousands.
Yeah.
And when it's busier, you're going to see 5,000-10,000 lot bids and offers. And let's say that they're like right now, 103.16 spot 8 bid for 1,100 contracts. You can be sitting there working a 5 lot, and there's 1,100 on the bid. All of a sudden, you're filled, and there's still 1,100 on the bid.
That's a good point. So for those of you who are interested in trading interest rates and you haven't done it yet, this is a lower margin market than the 30-year Treasury bonds or the ultras, and it moves kind of orderly. It's a great way to get introduced into interest rate trading is the 10-year notes. Now it moves a little slower. It's a little more boring sometimes, but you get some movements. And remember, every single handle, 110 to 111, that's $1,000 per contract. So it's, it could move pretty decently, especially in today's Fed watch environment.
The bonds and notes have been making moves in a day that used to take a quarter to do.
Yeah.
You know, so there's a lot of volatility, and as long as you're right or right out, RORO, as long as you're right or right out in your trades. Look at 103.17 spot one, trade 7,777 times. Today's going to be a good ass day. Yeah, let's go. So,
All right, all right, all right. So Pax, man, we are up against time. Capital Preservation Friday. I am glad you are back, man.
no, me too. This is a young man's game, Jimmy. Young man's game. The young person's game.
Well, that's right. That makes your wisdom. I mean, you're young to me. I'm sorry, but you're young to me. But your wisdom is greatly appreciated, brother.
Thank you, everybody. And speaking of young person's game, I'm looking forward to seeing what Sara has to do. So let's go, Sara.
Yep, absolutely. Thanks, Pax. I'll see you next Friday. And we do have Sara Strat Sniper in the house with us today. Sarah's going to be trading the open. Good morning, Sara. How are you?
Good morning, Jim. It's good to see you again. Happy Friday.
Happy Friday. Looks like you are chipper and ready to do some trading today if the opportunity aligns itself.
Oh, there's opportunity. We're going to talk about it. I'm also going to talk about Tesla because why would I not?
Yeah, no, it's funny that I'm really eager to hear that conversation. Yesterday I was joking around with Leo at the end of the day, and I was like, "Hey, is it time to buy some Tesla calls here? Is this just blown out of proportion or not?" I don't know.
I don't think so. It's so funny because the technicals like literally aligned perfectly with this this little tweet war that these boys are having. It's pretty amazing, and I'm gonna get into it. I'm gonna show you. I wish I was still holding my Tesla short from what was that, Wednesday, because we shorted Tesla Wednesday because it was like a picture perfect strat setup, but I didn't, and can't be perfect. We hit our targets to the downside. Who would have thought these boys would be fighting the way that they are? It's funny,
crazy. I
but
mean,
it's also extremely scary.
yeah, it's not good. We could make fun of it and say it's childish, and it's really childish in my opinion. And I'm not supposed to be talking about this live on the air, so I won't. But come on, let's be serious people and let's go move forward.
Yeah, for sure. And it's just, like from a normal American standpoint, it's scary. You got like the most powerful people just going at it. It's like, ooh, like I don't know,
Yeah.
like what's gonna happen. But
Yeah.
we, whatever. It's good that we're in this space. We can trade. We can, make our own money, which is amazing. But yeah, it's a strange time, I'll say.
Yeah. And before I let you go, one more question. We're seeing the reaction to non-farm payroll that just happened, and even the S&P's, again getting close to that 6,000 level that we keep bouncing off of, or maybe not achieving. Does it seem like maybe that's going to just that alone today, giving no other news, could kind of help inspire a continuation rally here?
Yes. So, for example, so ES is still an inside day, but NQ took yesterday's lows. And what NQ is trying to do is it's trying to go take out yesterday's highs. So today, while we're trading, I'll only be looking for longs, and I'll explain again why, and the three universal truths of the strat, and I'll talk about why we're going to be targeting yesterday's highs. And ES will also try and go take yesterday's highs, but NQ's been the stronger one, although today it did take yesterday's lows and ES did not. But still, they're both trying to go take out yesterday's highs. So we're gonna look for longs this morning.
Okay, so right now that's your mentality right now. We're looking for places to get long in this market.
Yes.
Very, very awesome. All right, all right. Well,
And
I'll be in
even
the chat. I'm sorry, go ahead.
I was gonna say, even last week, 2 weeks ago, me and my partner Alex, we've been calling for new all-time highs based on the higher time frame charts, and I mean everything still looks good for that. We've been calling for it by the end of the quarter would be ideal, but it doesn't have to happen by the end of June, but preferably it would. But yeah, and I know Pax was also calling for all-time highs, which is cool when traders kind of align in their, analysis. So
Yeah, I mean, the
yeah,
end of the second, it's June already, isn't it? I mean, the second quarter just seems like it just flew on by.
it did. It really, really did. I can't believe it's June either.
Yeah. Anyway, all right, all right. Well, listen, Sarah, thank you for being here with us. I am going to be in the chat along with Shai and wish you the best of luck today. Hopefully, we find some great setups.
All right. Thank you, Jim. All right. Quick shout out to Frankie and Solanki. Thank you guys for being here. All right. Let's teach them the strat, shall we, boys? And girls, but I was specifically talking to 2 boys. The strat. What's the strat? Strat is a trading methodology created by Rob Smith, who passed away, unfortunately, about almost 2 years ago. It'll be 2 years in July. And he simplified price action down to 3 universal truths and 3 very simple ideas. So the first universal truth is there are only 3 candle types. There's only 3 things that can happen from one bar to the next. The first one is an inside bar, which we call a 1, which the high and the low fit completely inside the previous candle's high and low. You have 2s, which are directional, and there are 2 kinds of 2s. You have a 2 up, meaning it took out the upside of the previous candle and has a higher high and a higher low than the previous candle. And then you have a 2 down, which is the opposite of a 2 up. It took out the downside of the previous candle and has a lower high and a lower low. We call those 2s. And then you have what you call a 3, which is an outside bar. So the outside bar takes out the previous candle's high and low. And an outside bar is the most important one. It is a broadening formation on a lower time frame. Okay, so that is the first universal truth. The second universal truth of the strat is full time frame continuity. And what that means is you have 4 consecutive time frames in alignment, or meaning that they're all the same color. So let's say, since we've been in a pretty bullish market, let's say you've got the quarter is green, the month is green, the week is green, the day is green. We want to be long because we obviously know who the more aggressive participant is. It is the buyers. So we're always trading in the direction of full time frame continuity, or another way to put it is in the direction of the overall trend, right? And then the third universal truth is broadening formations, which I'm going to show you guys all about Tesla because it's so funny that this is happening right now, but it's also extremely technical and it makes perfect sense. And that's like one of the really, really cool things about the strat is you can look at a chart and understand the why. Like, why is the price going up? Why is the price going down? You can just see it, so you know what's happening. And then not a universal truth of the strat, but we use multiple time frame analysis. So we use time frames from the year all the way down to the 1 minute. And we also do something called domino trades, where a lower time frame setup, such as like a 2 up, 2 down, say on the daily, and this is gonna come into play when I start talking about Tesla, triggers a higher time frame setup. And there's only so many ways that price can reverse or continue, and this is these are the ways. Like, this is it. So if you want this, you can go to my Twitter profile in my pinned tweet. If you go like into the comments of it, I have this. And you can go and get it there. Okay? So let's talk about Tesla, because it's literally perfect. It's perfect strat. It's amazing. And I'm going to show you why. So when we trade the strat, we use 4 time frames all the time. And this allows us to see what's happening on all the time frames. It allows us not to get sucked into a single time frame. And that's the problem with most like technical analysis, is they're looking at one time frame and they're finding patterns on one time frame. But if you go up a time frame, that pattern no longer exists. So we use all the time frames and we use them at the same time. So this is why my charts are split like this. So I've got on this chart, I got the month, the week, the day, and the 4 hour. But for this kind of price action walkthrough, I'm only going to be using the daily. And I'm going to show you why real fast. So what is a broadening formation? It's the opposite. Okay, most of you know what a tightening range is, right? It tightens, right? So you have lower highs and higher lows, right? So a broadening formation is the literal opposite of that, where you have higher highs and lower lows. So the lines slope in like people also call these megaphones. So the lines will slope in a megaphone type pattern, right? And people hate this. Traders hate this. They call this stop hunting. It's not stop hunting. It's just you have to know when you're at upside exhaustion. Like once you take out this high, you're at upside exhaustion. Once you take out this low, you're at downside exhaustion. Then we look to play back through the range. I'm not sure why these lines are so wavy, but they are. Okay. Anyway, so this is a broadening formation. And it's so funny because Rob, when he was like discovering the strat, he like read all these books and he's like, oh, the broadening formation is so rare. And it's hilarious because it's not rare at all. It happens all the time. It happens on all the time frames. People just haven't trained their eyes to see it yet. So we're going to talk about Tesla. And do you see, the first thing that I want to point out is on Thursday, 5/29, Tesla took out a major pivot target, right? Of 367. So in the strat, we call that exhaustion risk. And what that means is if price is going to reverse and if longs are going to take profit, it's gonna happen at this level. But you have to see a reversal. And a reversal can be an inside bar and down. It can be a 2 up, 2 down. It could be a 1-3. So there's only so many kind of reversals, right? Okay, so exhaustion risk when we took out 367, all right? Now, what I want to draw your attention to, this was just the perfect, it really doesn't get any better than this. This is the perfect strat setup. Because if you look at this chart, and many of you might not see this, but you have a high, a low, a new high, a new low, a new high, a new low, a new high that expands in the direction of full time frame continuity because all the time frames were green at this point, taking out this major pivot target, right? And then we saw a 2 up, 2 down reversal on the day. So this, if you didn't take profit up here and you were trying to let it run, you better take profit once you go 2 up, 2 down, okay? I actually did not catch this one, but yesterday, or sorry, that would have been Wednesday. Wednesday, we caught this, and we had this double bottom down here. And in the, actually, it was technically a triple bottom. And in the strat, you know, a lot of traders see a double bottom, a triple bottom, and they're like, oh, that's really strong support. We're the opposite of that. We're like, oh, that's a really strong downside target. So on Wednesday, we shorted on this is a 2 up because it took out the upside of the previous candle, 2 down, targeting the bottom of this broadening formation, which was 331. And we hit a low of 327 and some change. That was a really nice short. It was extremely technical. At this point, you remember how I was saying that we can have lower time frame setups that trigger or reconfirm higher time frame setups. So here you have a 2 up shooter on the day. Okay, I'm going to show you the week. Let's delete all these blue lines. We had the same exact setup on the weekly. We had a 2 up, 2 down. So that daily setup, right, reconfirmed this 2 up, 2 down shooter week. And we've hit target 1, we've hit target 2. And now they're trying to go and take out last month's lows. So this is just like really good stratting. And this just correlates to what we do in futures. So I know most people on the stream obviously trade futures, but it's the same concepts, right? And again, I hope the market opens soon. Otherwise, my long's going to be toast. And I'll explain why. Because again, in the strat, there's only 3 candle types, right? So yesterday was a 3. It was an outside bar, right? Took out the high and the low of the previous candle or the previous day. Okay, the same thing is happening today. So they opened down here. If you view, all right, if you view this outside bar as a range, and I talked a lot about this last week, if you fail to stay below it, right, they're trying to go outside bar again. And you can have multiple outside bars in a row. And what we know about this is, again, it's a broadening formation on a lower time frame. So that's why I know that NQ is trying to go and take out yesterday's highs. Hence the bias. Hence we have higher time frame bias. Because if we go to the quarter, the same thing I just showed you on the day is true on the quarter. So if you view, this is last quarter, this red candle. If you view last quarter as a range, we're unable to stay below it, right? So we are trying to go and become an outside bar, and that'll bring us up to all-time highs. So that's why my partner and I have been very bullish on the market, you know, for a while. But there's only 3 candle types, and a 3 doesn't start as a 3. It starts as a 2 that fails and then reclaims the range, and then it's trying to go outside bar. I hope that makes sense. Hi, Deli. Good morning. Yep, we don't use indicators. There are indicators for the candle types, like the 1s, 2s, and 3s. But honestly, I prefer, if you're learning, that you don't use indicators. Because, again, there's only 3 candle types. So it's not difficult, right? You have an inside bar, you have directional bars, and you have outside bars. So just practice on identifying them on your own with your own eyes. Because The thing about indicators is they can be wrong, and you're relying on them for information that you kind of shouldn't be. Man, it's just so strong. We're going to get to yesterday's highs probably before the market even opens, and then I will be like, we hit the target, and now I've got nothing to do. Yeah, a lot of us were short Tesla. So wonky. You're so cute. We appreciate you. Uh, choo, 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 choo. There was good broadening formations yesterday. And this kind of price action like wrecks people, but maybe NQ was better. I can't remember. Hold on. All right, I gotta get this box off. I hate the box. No, it was ES. All right. We shall draw it. This might look funny, but you have a low, a high, a new low, a new high, a new low. They're trying to go make a new high. So that's again, and that's why I said we're trying to target yesterday's highs, because that's just where it's trying to go. So this might be an ugly broadening formation. It might look a little prettier on like a 2 hour or 4 hour. Yeah, it would look like this. High, low, new high, new low, new high, new low, expanding to the downside, but then coming back up. So again, today's a long day. Also based on full time frame continuity, right? So we've kicked back into full time frame continuity where every time frame is green. At least, I don't know if the year is green. Let's look. Yeah. So the year is green. 6 month is green. Quarter is green. This chart looks funny. Quarter is green. Month is green. 2 week is green. Week is green. 2 day, green. Day, green. 12 hour, green. This is a great setup on the 12 hour. This is a 3, 1, 2 up. So one could have entered here. 3, 1, 2 up. Is that on the sheet? It is. It's right here. A 3, so an outside bar, which is a broadening formation, inside bar consolidation, then they pick a direction. So 3, 1, 2 up. I mean, we have a setup for everything because, again, there's only 3 candle types, so there's a finite amount of ways price can, continue or reverse. Sorry, one sec. So yeah, we got 7 minutes till open. Hi, Shanti. Good morning. She's also one of us. She's in our Discord. Silver. And then this is on NQ. This is a 3, 2 down, 2 up that's in force. Is that on the sheet? Of course it is, because there's only a certain amount of ways price can reverse. Right here, 3, 2 down, enter, when this candle opens and breaks the high of the previous candle, where is it trying to go? It's trying to go up there. So this is a 3, 2 down, 2 up. And again, why we're trying to go take out yesterday's highs. Well, thank you, Easy Money, and it's good to hear that. He said, you and Alex are really good teachers. Watching y'all's videos changed my trading. Thank you. That's awesome. Once you're drawing a broadening formation line on a time frame, how long are I can't see those little hearts in the way. How long are they in effect? It's not, and people get so hung up on drawing the broadening formations. The lines don't matter. What you're trying to do is identify the broadening formations, like I just drew out. And again, broadening formations are going to have, where's my little drawing tool? Broadening formations, you're going to have higher highs and lower lows. So it's not the drawing of it that's important, it's the understanding of it that's important, and that's why I actually prefer to teach like a finger doodle method, like you just saw me do earlier. High, low, new low, new high, new low, coming for a new high. So it's just about identifying what's happening, right? So this is why breakout traders get wrecked, because they're always entering at exhaustion risk, right? So we are not looking to get long at the highs. We're looking to get short at the highs. We're looking to get long at the lows. So I feel like, in a sense, we do the opposite of what most traders do. Because that's just what happens and how we were taught. And oh, I hate when I have oh. I don't know why my phone just said there was an alert on ES. I mean, I moved the line, but let's see. Let's go look at the first thing I notice about gold is we are a compound inside bar, meaning all of this price action is stuck inside this leg. So not great. Oh, silver hit its target. Cool. And we're always targeting pivot highs, right? So if you're long, you're looking to take out these people and these people. Now you got nothing nearby, so now you're at exhaustion risk. And we just took out last year's highs. Oh, look at that. You can see your broadening formation. So lower low, and they just made a higher high. So if you, again, it's what we're always doing. We're looking for compound outside bars. So if you view that low and that high as a range, this candle is an outside bar of that range, or these two candles are an outside bar of that range. So that would be your broadening formation. Low, high, new low, new high. Pretty awesome. feel like the futures chart is a bit different than the normal Bitcoin chart. All right, so the market is about to open. Not in a hurry just yet. We're going to see what we get. So NQ, again, is trying to go double outside day. And what that means is it's trying to go take out yesterday's highs. ES is trying to go 3-2 up. There's the little bell. So I'm going to be looking at smaller time frames on my trading view chart. All right, so we got ES and NQ are opening as an inside 15er currently. There's no strat set up here right now. Just got to wait a little bit. Oh, let's go. We need to go to a lower time frame. Oh, okay. So the 5-minute just went 2 down, 2 up. That was the entry, and I was looking at the 15-minute chart, so I just missed that. But we're already almost at the target. What I would rather have happen is they come down, stop out these people, and then go to the daily target. Personally. Not sure if that's going to happen or not, but I would prefer they stop out the morning time people and create a broadening formation. So high, low, new high. I'd want to see a new low. So I'd want to see them take out 745, and then I would want them to go back up. ES is, for some reason, stronger than NQ today, which is kind of the opposite of what's been happening. Oh my God, I just freaked out. I was like, what if the lid wasn't on this coconut water and I just threw it in the bushes, the plant? I also have that thought when I shake A1 sauce. I don't know why. So the thing about a 3. So I used to have this rule called the 50% rule, which was when I was pretty new to the strat. But you can play a 3 much sooner than the 50% rule. Let me see if I can draw it for you. So let's say you have whatever. You got a 2, okay? Hold on. Yeah, this will work. So let's say you have a candle. It goes 2 up. So your long trigger would be there, okay? Then, say it drops back below the trigger. You can short there with a stop at the high. Like pretend there's wicks. Like I don't know how if I can draw. Oh, there we go. Whatever, that'll work. So you can short there with your stop at the high, and then you're targeting outside bar. Oh, maybe we are going to get fresh lows, which is what I wanted. ES is so much stronger. It's really weird because NQ's been the strong one, like for a long time. But I want to see NQ take out that guy. So now we've got 3s on the 5-minute. So NQ is either going to be a 3-1, so a 3 and then an inside bar, or a 3-2 down, because while bars are live, they can change. So what starts as an inside bar, every candle starts as an inside candle. The question is, does it stay an inside candle, or does it become a 2? Right now it's inside. But I'd really like to see NQ take those lows out, and then I would look for a long. It looks like RTY already hit its daily target. Yep. So RTY 2 down, 2 up. That's on the sheet. 2 down, 2 up. The target is the previous candle. But always pivot highs or lows. So RTY already did its job. Now it's trying to go take out that 2139.6 level. Dow also already hit its target. So Dow went 3-2 up, but now it's trying to take out what? This pivot high, right? That's where stops are. We're always looking to attack stops. ES. Didn't do it yet, but it's trying to take out this pivot. And then, again, like what I said in the morning, we're trying to go take out yesterday's highs. That's the objective. That's where price is going. Or if you're an ICT person, that's the draw on liquidity. It's all this. The Strat and ICT. It's all the same stuff. It's just different language. ICT does have some more like concepts, but okay, so ES takes out that pivot high. So now it's going to go and try and take out yesterday's high. Going back to the 5-minute chart. So it looks like we're closer to going 3-1-2 up on NQ. I mean, I've got, I feel like I should just enter it. Oh, there it goes. 3-2 up. Which I hate entering at that. I don't like 3-2s. So SPY. I mean, I trade SPY based on the futures charts all the time. SPY, so, oh wait, hold on. I'm gonna miss the trade, which is fine. SPY, so SPY this week had a great setup. If you look at the weekly chart, And again, we are higher, so we do top-down trading. So we start at the higher time frames. So SPY is trying to go outside quarter. We know this. So we had a 3. This was a 3 2 weeks ago. Last week was an inside week, not fun to trade. This week we went 3, 1, 2 up, and we just hit our 1, 2, 3 third target. And again, the ultimate target is a new all-time high. And then trading is going to get really boring again because it's summertime and we're up at all-time highs and it's extremely boring and I hate it. But gosh, I'm going to have to go like the 1 minute or something. I want to get in there, but it's, okay, do you see the broadening? Do you see the broadening formation? High, low, new high, new low, new high. So we'd be looking to get long right there. And I missed it. What time was that? 9:36. So what can you do? But you see the broadening formation. That's what's important. High, low, new high, new low, new high. So trend traders get stopped out. And then we take their stops and we go the opposite way. And NQ is almost already at its outside day target. And then once that happens, then we don't know. The outside day target is up there. $936. Oh, that's still 100 points away. Shoot. Come on, give me the 1 minute. Oh boy. Yeah, but that 1 minute broadening formation was awesome. Okay, so ES takes out yesterday's highs, as we said was where it was trying to go. I'm going to miss it. It's going without me. Why don't I like 3 2s? Because I'm always entering at highs or lows, and I don't like to do that. You got in on a 2-2 up on the 3 minute. Nice. So broadening formations usually expand in the direction of full time frame continuity, so you would expect it to stay out of here, so like above the high. I'm going to see if I can get something here. If we can get an inside and up, I'll enter, even though I don't love where I'm entering. But we know where it's trying to go, yeah? It's trying to go to yesterday's highs, just like ES just did. But since ES just did that, that also, like by proxy, puts NQ at potential exhaustion risk. That's 7 seconds till the new candle. All right, 2 up. I'm going in. What's the level? 935. We'll see. I should have entered down here, but I was yapping. ES is so much stronger today. It's wild. Okay, well, I'm going to move my stop because I just don't want it to go outside bar on me. Two, 1, 9, 3. So because we know what reversals look like, I can move my stop up because if we go 2 up, 2 down, I don't really want to be in it in the long anymore. Capital preservation, right? I could even go to break even, which I will. And the thing about the strat is we're always looking to get into winning positions immediately, and then if they aren't doing what we want them to do, we get out immediately. So this is why I took this inside bar and up entry. I marketed in, but so I got a little later of a fill. And it looks like I'm going to get stopped out by a failed 2 up, go 3, possibly. I don't know. Even if I do, it's just a paper cut. Like a deeper, like, let me get stopped out. Boop. Whoa, ooh, ooh, ooh. ES is pulling back. 1 second. Don't stop me out. It's okay. If it does, I'll just re-enter if I see another 1 minute entry. But we use tight stops, right? Like, we don't like to lose money. So if I can get a 3-2-2, I will enter again. So we want to see a 2 up on in, okay, like right now. Okay, we're back in. This is a 3-2-2, which is on the sheet. 3, 2 down, 2 up. What? This is the 1 minute time frame. I don't know what you're talking about. They already took previous day's low. Move, would you? Don't you go inside and down. I'm gonna, whoop, don't do that. Go inside and up. Ew. Just go to outside day. Another paper cut. Glad I stopped out though, because they're trying to take that low out. Now, ES is at exhaustion risk because it took out Friday or yesterday's high. NQ still has a range to come back through. That's why I only am interested in NQ. Well, son of a gun. We're an inside 5 minute on NQ. I can't believe they didn't take that low out, this guy. I wish they would. Stop people out. Do it. Go down. Go down, then back up. Yeah. Yeah. Which strat setup is my favorite? That's hard to say. Not inside bars, though. So some sort of 2-2, like a 3-2-2, a 1-2-2, a rev strat. So basically some sort of corrective activity. So some sort of pullback, right? So a 2 down, because this candle took out the low. So 2 down, 2 up. Or a 3-2-2, or a rev strat, which is inside, 2 down, 2 back up. So some sort of 2-2. I hate 3-2s. I don't trade them. I don't like them. I'll do a 3-2-2, but like a 3-2 continuation, which is like this. So you're actually entering at the highs. I don't like that. I like to see them fail. And then I'll play the 3-2 up, 2 down. Like I'm not trying to be the first one in, you know, to the highs. First one in's first one out. All right, so they did take that low out. I could be crazy aggressive right now and just put a stop there, because I kind of wanted to see them take that low out. And I'm going to get stopped out anyway. Damn it. What's going on? The 5 minute. All right, 2 up, 2 down, 15 minute. Red 2 up. They're just taking profits because, again, ES hit its daily target, which I mentioned can put NQ at exhaustion risk, and it is. And again, here's a 3-2. I don't like to enter there. You're entering at the highs. You're entering at exhaustion risk. Ooh, whoops. Are they going to come all the way back down here? This is what I wanted earlier. I wanted to go high, low, new low. They didn't do it, but now it looks like they're coming for that low. They are. They're trying to go double outside 15er, which is against daily time frame continuity. And all the time frame continuity except the 15 minute. We got a 15-minute new candle coming in 2 minutes. Oh, they're trying to come down here. Oh, what is Tesla doing? That's a good point. Tesla's just an inside day. Inside day, inside 4 hour. Nothing really to do with Tesla right now. going to try again with this hammer. It's not looking great. Failed 2 so far. Nope. Ugh. This is not my day. So. I'm going to attempt for the outside 5-minute bar. Oh my goodness. This is just. I could have sworn. Oh, now it's going to go outside bar after stuffing me up. Awesome. RTY hit its daily target, so it's at exhaustion risk when it took out, what is this level? 2130.6, that was the target, and it's pulling back from there, which is like to be expected. Maybe we'll get a nice like 15-minute setup or something. Right now we're set up for we don't have any kind of 15-minute setup right now. Not to the long side, which is what we want. How was your guys' trading week? Uh-oh. You have a $4,000 computer and it just crashed mid-trade? Ooh, that's scary. I hate being in a trade and then like the power goes out or something. That's pretty terrifying. Luckily you have your phone. You can usually get into it. You had a really good trading week. That's awesome. I had a pretty chill trading week. I entered positions on Monday and then shorted Tesla Wednesday. That was really about it. I didn't trade a lot this week at all. Yeah, good to have a backup for sure. We are inside 15-minute candles, so nothing's going on right. Meow. Up 20% on the account for the week. That's awesome. Is there a Fed speaker today? I don't see one on my calendar. Consumer credit at 3 p.m., which is a yellow folder event. Oh, he's speaking right now? Okay, well, I did not know that. Is this a standing desk? I think it is. I don't know how I didn't know this. Nobody told me. I just found a button. I have found an up and down button. Oh, that's cool. It doesn't stand? Or it does? No, I know. Just saying. Still inside 15s. 30. Inside 30s, inside 15s. Inside 60s. What does that mean? It means price isn't moving anywhere. So we have 16 minutes till the new 15-minute candle opens, which at this point you want it to stay inside and then go 212 up for that daily target, because still the target is to take out yesterday's high on NQ, which is up here. Right now it's just chop chop. What is oil doing? Ah, nice. You guys want to see a cool broadening formation on oil? Yeah, you do. Well, you can see it. It's drawn out, but pretend like, again, it's not about the lines. It's about training your eyes to see what's happening. So pivot high, pivot low, new high, new low. Trying to make a new high. So once you're unable to hold below the lows, failing the lows, where is it trying to go? It's trying to go make new highs. It's everywhere. But they say it's so rare. You just gotta make your eyes draw attention to the pivot highs and pivot lows. We already said gold was just stuck. Silver did its job. What's the Widowmaker up to? Wow. Look at that chart. So natural gas is trying to go outside year, which would mean, I guess, a new all-time low. Three, two up, two down. However, not in force on the quarter. But yeah, target's a new all-time low for that guy. Oof. Still 3 more minutes. So ES went 2 down. Not really going anywhere though. NQ is still an inside 15-minute. Kind of a slow morning. We've kind of been sideways for the last 30 minutes. We're still stuck. This is that inside 15-minute candle. Pretty lackluster morning. I really would prefer some corrective activity, but we might not get it. gonna see. So a 212 is above, what is that, 850? Double inside 15er right now. Still stuck. People are asking about a 10 a.m. reversal, but look how green the day is. Like, I only want upside. I only want some setup. The 5 didn't work, so now I'm defaulting to the 15. Come on, buddy. Do something. This double inside 15er is just like, price can't move if it's stuck inside. You know? I do use buy sell stops, yes. It appears we're just tightening. Yeah, let's hope not. Let's hope not a consolidation until the stream ends in 42 minutes, because that would just be not a fun time. Do you see it? The tightening range? Boom, poppy, boom, boom. Stuck. And I'm not interested in a short, so if we go inside and down on the 15-minute, I don't want to take it. Because the day is so green and we're trying to go outside day. So I want a little corrective activity and then a reversal. But it's not giving us anything. It's giving us sleepy vibes. No, I won't take the short. Nope. 1, 2, 3. So 3 out of the 4 futures are still an inside 15-minute, meaning nothing is moving. We still got 10 minutes. Some days there's a lot of action, some days there isn't. It's okay to not push buttons. We're gonna push buttons, but not yet. Now we've been sideways for almost 45 minutes. What time was this? Since that can't be right. 10:15. I guess it hasn't been that long. But I think it has also. ES is greening up. Yeah, sorry, there's just not a lot to do right now. Anybody have any strat questions? Yep. Not today, I'm not a real sniper. So inside 4 hour, 1 hour, inside 30. This is what you call the no-no zone, right? Or where you're gonna get chopped up. 7 minutes. This little heart symbol is in the way. Will you ever take a rev strat without time frame continuity? For instance, where it's hit exhaustion. Yes, I love exhaustion reversal plays, which don't have full time frame continuity. Enzo, it's pinned in the chat. The indicator. It's just with the ones, 2s, and 3s. What scanner? My scanner? Am I a fan of my own scanner? If you love exhaustion plays, why? I can't read it. There's a stupid little YouTube heart in the way. Why something today? Oh, because NQ hasn't hit exhaustion. I've never been able to find your chart pinned to your Twitter. That's a you problem. It's definitely there. We're not overbought. Well, you can say you are, but doesn't exist to us. So you have to like go into the comments of my pinned post. There's a bunch of stuff in there. It's been there for years, so I know it's there. Yes, when things hit exhaustion risk, yes, you go down to the lower time frames. Because you can expect things to reverse there. Because that's where profit taking should happen. Oh, we're getting a whole bunch of nothing today. Sorry, guys. If I could make the market move, I would. But be great if they took out that low. We're still stuck in there. If you look at NQ, that low to that high, 5, 10, 15, 20, 25 minutes stuck inside of it. Simply nothing to do. Let's see. ES is at exhaustion risk because it took out Friday's high. So that, the yesterday's high was exhaustion risk on ES. The problem for me was NQ was not at exhaustion risk. So I like for at least both of them to be at exhaustion risk. So though they did go 15 and down and they did hit their target. But NQ, so the 15-minute inside bar, which again, I said I really wasn't interested in shorting. And I don't care if I miss a short because the day is super green and this is likely just corrective activity, but so this is what we call downside exhaustion. Problem is, it looks like they're trying to take the 60-minute down. I just don't like this 60-minute candle is the problem. Because we're green on the day, right? But we have this inside red 60-minute candle, which doesn't fit my bias for the day, right? So I'm trying to go up here, and we're getting a corrective 60-minute candle, which I don't really want anything to do with. And again, ES is at exhaustion, so if you were going to short something, ES would have been the one since it took out the highs, right? And NQ is just kind of stuck right now, so. MES is trying to take these lows out. NQ is also trying to take those lows out. Ooh. All right, I'm trying. I got in late, but whatever. Day. These charts just won't move, guys. Huh. Need you to explode upwards would be great. There you go. Oh, come on, a little bit more. There we go. So what I'm looking at is a broadening formation, right? So we made a lower low. We took out anybody who had been long since the open, basically, at 9:30. Right? Ooh. So now I'm looking up here and up here. Broadening formation. High, low, new high, new low. Looking to go make a new high. I don't know if I'm going to have enough time to sit and see if we can make that target. Hopefully, but we'll see. And we got a lot of stops up here based on that 1 minute chart and all those lower highs, because that inside double inside 15 or whatever it was, this is one big giant tightening range. So I'd want to see them start taking these stops out at like 834 to blast it, but yeah, like 834. And I've already taken 2 paper cuts, I think just 2, and I don't really want more, so I'm moving my stop up basically to break even. We are an inside 15 minute, but it'd be awesome if we could go do that and go 2 up. Oh, there's just no aggression in any direction since the open. It's lame. But this 15-minute candle is green. We got 7 minutes left on it. Just go start taking some stops out, please. Make it moon. How boring. How boring. Even if they could take out 821.75, like that's the last like lower high where stops would be. Yesterday's high is the target. But it's slow going. But that is what we want to do as strat traders. Like on the 5-minute chart, I'll show you. I'll show it to you again, is we want to stop people out. So we took out the 935 low. Then we want to look for reversals. Boom. But we need to get up in there to actually scare the shorts. We can take out 21.5, it might start getting the shorts to cover. Oh, we got a new 5-minute flip. All right, get up there. The 15-minute trigger is at 844. We still want them to get above 834. Again, that's where people are going to like panic on their shorts. do it. Again, if we can get above that 833 level, like we should see a new high of day. And then again, the daily target is yesterday's highs. I need them to break that 33. There you go. Keep going, buddy. Give us new high of day. I'm just going to raise my stop more because I took some paper cuts. Trigger the 15-minute at 8:44. And what I mean by the 15-minute is a 2 down, 2 up reversal. Right? So we're trying to... Well, on these are the mini or micros rather, but the NQ did not take out the previous candle's low, which is fine. It's a little slight discrepancies when you're trading, you know, minis versus micros. But I need NQ to trigger that. Either way, whatever. I don't think we're going to have enough time to see it through, but and honestly, if I wanted to, I could jam my stop up here, recoup my loss from earlier, and then look to get back in, which I might actually do. Oh, we got a flip right now, so I am going to do that. We got a new 15-minute candle. And I don't know how that didn't stop me out, but whatever. We're a lot closer to going inside and up. But again, I took some paper cuts, so I'm not trying to lose like 30 points for no reason. I'll look and see if I can get back in, but I wanted to make something. Now the 15-minute candle high would be this level there. 836 and a quarter. So if we can go 2 up. So what I'm trying to do is to get the 1 minute to trigger the 15-minute. Two up, boom. Okay, we're in. We need it to break the 15-minute candle, which is here. 8:36 on this chart. Oh, please don't get stuck inside 15-minute again. That would be awful. The indicator's pinned in the chat again. I don't want it to go 2 down because I'm trying to trigger this candle to the upside on the 15-minute. And if it went 2 down, that's the opposite direction of the way that I want it to go. So that's why the super tight stop. And I'm looking at this. Right? Like, this is an inside 15-minute, which I want to trigger to get us to new high of day, and then I want it to keep running to up there. There we go. All right. So now, all right, so we've triggered the 15-minute by barely. We're still in inside 30-minute. All right, again, I don't want it to go 2 down after triggering that 15-minute, so that's why my stop is there. I will lose, what, 5 points? Not a big deal. But we did trigger the 15, and we don't want it to reverse, is the thing. I can't believe this didn't explode more after starting to target all these short stops. Maybe we will. We'll see. Again, I'm going to move my stop more because, again, I don't want it to reverse on me after triggering that 15-minute candle. Yep. All right, stopped out. We will see if I get another one, but this is not like not super fun. Oh, they're trying to go outside on the 1 minute. All right, we're back in. Oh. Red, green, red, green, red, green. Just, ugh. No. Oh, no. I wanted to move my stop before that. This is the most lackluster day ever. Ugh. 8 minutes left on this 15-minute candle. It's pretty teeny tiny, because we're still an inside 30-minute. So I'm donezo. That's it. That's a wrap. Yeah, this wasn't great. So we open, right? Pretty much get stuck inside. So there's just not been, this has not been, morning that things are moving because we're just stuck. Now, on the next 30-minute candle in 8 minutes, this is an inside bar. So if you get an inside and up, I would take that, yes. But the 15-minute is not moving. Hi, Tracy. So yeah. And you can see this candle and this candle are stuck inside this candle. That is the inside 30 or the sideways 30. And yep, not a lot to do there. So when I say get the 1 minute to trigger the 15-minute, I'm talking about these setups. So you either have an inside bar break, you have a 2-2 break, like on the 1 minute, that can trigger a 15-minute setup. So we had an inside 15 and up, right? So that's a setup from the sheet. A 2-1-2 up right there. So I was looking for a 1 minute to trigger it, which it did. It did work. It's just there's no aggression here today. Like, things just aren't moving. My stops are too tight? Well, not for me. I want to win immediately or lose immediately. I'm not trying to lose big. And it is Friday. Yeah. See, I'm glad I got stopped out and stopped out tight, because that's not what I want to see. This 15-minute candle is doing absolutely nothing. It's getting even smaller. Like, the ranges are getting smaller. Not what we want. And again, it's not doing anything. There's nothing to do here. We ticked down for a second, but basically we're stuck, right? We are stuck. Stuck. Oh, I'm sure the move will come the second I get off, because it usually does. So be ready. Wait for that inside 30 and up break. Yes, I use stop orders. Well, happy Friday to everybody. Sweat stuck like Limp Biscuit. Hi, Austin. Oh. Let's see. Stats say QQQ 22% to up. Here, I'll pull it up real fast. Oh, we hit that low that my cursor was on. That was the point of the cursor being there, but. Okay, buddy. Stats day. So we got what? 70% of the S&P is a 2-up day. 67% of NASDAQ is a 2-up day. All sectors are green? That is interesting. Energy is the greenest. But yet things still aren't moving. So there's a baby broadening formation. See how we took out that low? All right, now they're going to go. Watch, because they took out stops there. If you go to the 1 minute, stops, right? Stop them out, reverse. Broadening formations. And I'm getting off the stream too soon. I'm not entering any positions. But again, on the flip in 2 minutes, you're going to have an inside 30-minute. It's going to look like this. Template 30. And that 1 minute was a good start to potentially trigger that 30-minute. Whoop, whoop, whoop. Didn't mean to do that. All right, so stop them out and then reverse. And then that's the 30-minute trigger right there. So.
Hey, Sarah.
Hey, Jim.
Good job this morning.
Very sideways and not fun trading today.
So by that comment, I'm assuming you're going to be done for trading for the day.
Well, yeah, I mean, I got to drive home. It takes me like 30 minutes to get home, and then, then it'll be lunchtime, and yeah, probably.
All right. Well, I'll tell you, every Friday I learn a little bit more about the strat. I think I'm going to become a master eventually.
Oh, well, that makes me happy to hear.
Yeah. Yeah. Well, thanks for being with us. Big plans this weekend or hanging out? What's going on?
No big plans. Just hanging. You?
Hanging around. My oldest boy is coming down from, he's done with college, so he's bringing all his stuff from his apartment and sticking it in my garage and wasting up my garage space. That's what he's doing this weekend. So I'll get to see him, though. That's good.
That's funny, and congratulations to him, too.
Thank you. I appreciate that. So anyway, thanks for being here with us. Happy Friday. I'm looking forward to seeing you again next Friday.
Yeah, I'll be here. Same time, same place.
All right. Smash that thumbs up button for Sarah. Awesome job today, as usual. Now we're ready for our special midday end of week wrap with the very own senior economist. Sorry, I just gave you promotion. Shy girl, Tracy, how are you?
I don't. I'm good. How are you doing?
Pretty good. It's Friday. I'm really anticipating martini o'clock later on today. Maybe earlier than later. I don't know.
It's all good. We end our day at noon here. So,
Man, oh man. Anything new in the news cycle that's happened in the last hour or two?
no, not really. We had some new Iran-related designations, just some individuals, and just some recycled Elon and Trump headlines over and over and over again. So that's about it.
So is
Not
there
much
any,
has happened since we last talked at 8:30.
I'm surprised there's no planned peace accord.
Well, we're supposed to have a call, and then the White House said they're not going to have a call, so that's all up in the air right now.
Unbelievable. Well, let's get into our end of week recap, if you will, and let's focus on the metals today. I mean, the metals markets have been really kind of, in my opinion, the most interesting that we've seen this week, and we could just start off with gold and work our way around the horn.
Yeah, I think that's a great idea. They have been the movers this week, the movers and the shakers. And we've kind of talked about all of these and kind of already gone over some of some of the fundamental reasons, but we'll skim over them. There's nothing particular happened today, anyway, to move any of these markets. Again, it's been a quiet news day, but let's go through them.
Yeah. So I pulled up a gold weekly candle chart here, thinking, well, let's look at a weekly chart for a change instead of a daily, just to kind of put it in perspective of what happened this week. And then we can consider going forward here. But, I'm just going to go ahead and draw some rectangles up here. I should have done it already, but it seems like we're getting a lot of resistance right here at 33.64, give or take. And this is the front month gold, August gold right now, August 25. Hey, that's my birthday, by the way, August 25th.
I will mark that down right now.
Uh, anyway, so we're kind of like, if you use your imagination here, you could kind of look at this is kind of I don't know, an ascending triangle type of pattern, right? We've really been on a tear all year long here in gold. We had a little bit of pause maybe in February, but then we took off again, and so we hit these highs right here. So, and the 33.64, 33.65, all the way up to 3,400 is kind of sticky. We have 1, 2, 3 pretty big sellers candles on a weekly chart. And then when you go down to the stochastics, it's trying to cross over again, which could be bullish. It's right now where it's 74, spot 72 on a weekly chart. So again, no major retracement either. That's the other thing I didn't add to my chart. I'm going to add it really quickly, Tracy. Hang tight. Bear with me. And I would probably do it from where this rally started with the bottom of my triangle, go all the way up to that wick. And we wicked down to 38.1% once, and that was it. So this is still looking pretty bullish, regardless of what's going on with the US dollar, it seems like these days. That begs the question, is the dollar really having a big impact here or not?
Yeah, I think we need to see. A pause is not particular to this market. So we've seen this market go sideways for a few weeks. We make a move up, go sideways for a few weeks, make a move up. And so I don't think, I certainly wouldn't attempt to short this right now, but I kind of wouldn't want to be long either. Kind of want to give it some time and see what direction it wants to go in.
Yeah, I agree. I would love to see a breakout to the upside here and take out some of these kind of probe wicks that we've seen up here. The highest one being approximately, right above that $35 level. So, $3,500 level.
Yes.
So let's toggle over to silver while we get a chance. This is another one that's just been
my
very
favorite
interesting.
market.
Yes, it is.
My favorite market, that. I lost my chart. So again, with this market, going back to gold for a second, I think a lot of the reason is there's so much uncertainty and we still don't have any resolution on tariffs. So I don't really see anybody wanting to kind of give up their gold right now, holdings, right? I mean, there's not really a reason to do so. If we, if by some miraculous reason July 9th comes and we actually have some trade deals, we might get a bigger pullback in gold. But until that happens, I don't know. And I think my gut reaction thinks that this is going to get kicked down the road for another 3 months. But I could be wrong.
Yeah, well, so
But
let me ask you
moving
that
on to
question.
silver.
Yeah, go ahead. Go ahead, Tracy.
No, go ahead.
No, I meant to, because you mentioned that July 9th number, and just to refresh my mind, and I mean, that's like the deadline for all of these tariff extensions, right?
Correct. That's the end of the 90-day pause.
It seems like this 90 days have been going on for like 900 days.
True. Very true.
All right, so silver now is wicked up to a couple of PAX lines up here over 36 bucks. Now we're still over 36 bucks right now, 36 spot 1-2. And I don't, I remember 2011 we were higher once, and then PAX broke out the Hunt Brothers highs way back in the day. I don't even remember what that was. So we're really kind of breaking new ground though on the upside, aren't we?
Yeah, from the last kind of like swing low, swing high. I mean, I kind of did my fibs probably different than a lot of people, but I have this at a 113% extension on the weekly. But it's not from the bottom that I pulled it,
Okay.
because
All right, so
there
look,
weren't any extensions left if I did that.
do you have a higher extension after
But
that?
Yep, I have 37. I have the 127.2% extension at 37.77.
Wow. All right, I
So
put it up.
we'll see. I mean, so this, all right. I mean, this is just, this still looks, the weekly candle obviously looks very, very bullish. But, again, I think, the fundamentals have been behind this market. We're starting to see some interest because it's less expensive than gold. We're seeing this with platinum too, which we'll cover later. And I think that because there were so many shorts in this market, just by looking at COT positioning, very possible that we get a big squeeze out of this. That said, I have been saying that I expected $40 silver this year and $50 next year for quite a while.
Wow. All right. So you're a mega bull. I love that. I mean, the chart itself speaks for itself. I mean, we took out this wick here. This was from end of March, and that was approximately 35.50. We took it out, and there's no really again, just like gold, there's no really retracement here to think of. I could draw a fib, but it's just too strong right now. And we've broken out of this short-term little, and this is weekly, so it's not that short-term, but this short-term consolidation range, and then we just kept on going and making new highs here. There's just a lot of bullish sentiment here in silver. Looking at the July silver, 62,000 contracts traded so far, so pretty powerful. We could even just kind of check out. I do have a daily up here. Here's the daily chart, which kind of drills in a little bit more, and you can see the moving averages, the 8, the 21, the 50, just driving straight up here. I don't have any, there's nothing else on this chart. There's no retracement, there's no extension, nothing, because we have a lot of empty sky above here for this market. Today, yeah, a little bit of a seller's probably coming in a little bit. Still a green candle, maybe some profit taking, who knows, but I'm still super, super bullish on this market. Let's rotate. Now let's keep rolling through the metals. Let's go to Dr. Copper.
Dr. Copper. All right. So Dr. Copper, I think, was interesting because we did hit that, $5 mark, which is kind of a psychological level for copper. We have pulled back some, but to me, this market really is about the fact that, even at the price level that we are right now, if we're over $4, this market is not saying global recession. So I think that's one of the most interesting things about this chart. And yes, the fundamentals are behind it. We are going to have a copper deficit for the next 10 years, literally, and it's just going to keep getting worse. But copper has been in a deficit and also traded at $3. So because of the economy, because of the global economy and things of that nature. But given that the backdrop of everybody telling us that we're going to be in this huge recession because of these tariffs, we just don't have copper acting like that that we're going to by any stretch of the imagination. So we'll see how that goes. I mean, I always like watching copper closely.
So, Tracy, is this still a litmus test for the strength or weakness of the Chinese economy?
It is, but not as much as it used to be because of kind of how the economy's changed. And yes, they are producing more renewables, and copper is used in a lot of renewables, and a lot of copper is used in EVs, like 4 times the amount that's used in a regular vehicle. But they also had the collapse of their housing market, right? Which a lot of copper is used in housing. So it's kind of a different dynamic. So I don't think that, I would say it's probably not as indicative as it once was. But that said, their usage has kind of moved from, from the real estate market to kind of the EV market.
Yeah. Okay. That makes sense. That totally makes sense. You still know I love that Tesla Y I drove in. One of these days I'm going to get one. It's a wonderful car.
I know you do.
Anyway, all right, let's kind of keep rolling here. Let's go to platinum. Platinum's another mover. Let me pop this guy up.
Another of my favorites that I've been talking to. So, that's blown through everything as well. This market's really been, if you look at a weekly, this market has been sideways between 900, let's say, and 1100, but mostly 900 and 1000 for a very long time, for months, actually, since last year. So I think that, and now we're breaking above it. And so always when we see kind of price coiled for that long, when it does make a move, whether that's to the upside or the downside, it tends to be more exaggerated, just from a technical standpoint. That said, the fundamentals are absolutely there for platinum as well. You've had the EIA come out and they cut 2030 EVs. That the consensus of how many EVs are going to be on the road was drastically reduced, and which means going to be more ICE vehicles on the road, and you're going to need more platinum for that. Besides all the other uses that it's used for, and a lot of industrial purposes. And then this one is also another one that we're starting to see more retail demand, because it is considerably less than gold is right now. So we are seeing consumer demand for bars, jewelry, and coins.
Interesting. Let me ask you this: is some of the for the EVs in particular, and maybe we could extend it to the conversation to solar, are some of the subsidies? The subsidies do seem to be in jeopardy. At least for the next couple of years. Is that going to have a humongous impact? I know Elon Musk is saying, no, we don't care about the subsidies, but they have to be, right?
I don't think, the U.S., to be honest with you, the U.S. market is one of the smallest markets for EVs. Just being honest. So, China, we don't even have any Chinese EVs here. I mean, now we have 100% tariffs on something we don't import, but aside from that, and Biden put those on, by the way, that was the other administration. But it's such a small market, and I don't necessarily think $7,500 on a $50,000-$60,000 automobile is going to deter sort of the demographic who can afford to buy that kind of car. Like, I think if you really want it, you're gonna get it.
Yeah. Yeah, no, I hear you. I'm just in full disclosure, the neighborhood I live in, and I'm kind of like on an island. I'm kind of in a remoter part of Charleston. Um, every single one of my neighbors, without question, has like an F-150 pickup truck or something bigger than that in their driveway. They can't even fit them in the garage.
There are a lot of those too in Florida, believe it or not.
Anyway, all right. So just looking at the chart, though, weekly chart, real quickly. I mean, this week's candle speaks for itself. We're tracking. We're tracking 1,171 right now. If we were to close right this second, let me just pull up a daily chart too, just to see if we get any magic in the tea leaves there. It's going to look really similar. We have this long-term area resistance, which is now support. I drew that rectangle through there. And again, same thing. Resistance becomes support in my mind. Right around that $1,100 mark is pretty much where that is. The moving averages are just sloping straight up again. And the slope of these moving averages, and Dave Keller let us know on Wednesday how important the slope of the moving averages are accelerating upward. So all three of them, the 21, the 8, the 50. Stochastics are, a little overbought, but so what? They've been up here for a little bit of time as well. So just from a daily chart, a weekly chart, any kind of chart, it looks like we're having a pretty good bull run here in this market. Intraday, you could say, well, there was some, we kind of stalled a little bit intraday. And actually, I don't know if that's the case. I mean, yeah, we made some highs, we sold off a little bit, but really nice point of control right now, suggesting market happiness somewhere between 1169, 1170. We'll round it up, and then that session VWAP right now is holding pretty good at 1167. So probably my guess is we'll settle somewhere around there unless there's any crazy what we would call unplanned news. Which is possible, by the way.
Very possible.
Yeah, and let's finish the metals with palladium. Let's do it.
You want to go palladium? All right,
Yeah,
let's do palladium.
Yeah.
So palladium also, it's a very strong market. Also, another one that would benefit from lesser EVs on the road because it's used in a lot of catalytic converters. It is definitely, I would say, one of those that's 100% or 99.999% an industrial metal. People don't generally collect palladium coins and bars. I'm sure that there are some out there, but unlike platinum and silver that's used in a lot of jewelry, you don't really see a lot of palladium jewelry or collectors of palladium. So this is 100%, I would say, or as close to 100% as an industrial metal as you can get.
That makes total sense. I mean, we have a double top right now, a giant candle today, very small wick at the top of this candle related to the size of its body. We have a really nice, and this is why I like these stochastics on a longer time frame chart, because a lot of times when you have these crossovers or cross unders between that 20 and 80 level, it could mean a change in direction, and I think we saw that here with that signal. I know it's a delayed signal, but we did, we wait for that confirmation candle and we go. The moving averages are arcing up pretty nicely here across the board. And just to really put it in perspective here, there's some upside room here. This is a weekly chart. Let me kind of squeeze this in a little bit. And I'm going to ask Tracy if there's a reason why we spiked all the way up to almost 1,200 back in October of last year. I don't remember, but that was I don't know, 2 weeks worth of fun.
It was 2 weeks worth of fun. And there wasn't really anything that kind of spurred that. I think it was more of a short squeeze that happened than anything. There was not a particular event attached to that.
Yeah. Okay. Well, in any event, there's room to grow here. My purpose is showing the weekly. I mean, I'm going to go ahead and draw a rectangle again. There is room to grow. When you look at some of the other markets, metals markets, it's like, wow, there's no milestone to achieve above, but here there is. So, as bullish as this is, and this bull run started April 11th, the week April 11th, and just kept rolling. Nice, orderly kind of rally. Not only that, last week we had that ADMA cross over the 21, and that's probably on a weekly. That's a pretty good move as well. So we'll see if we can get some continuation buying and pop us back up and take out this high, which is approximately. Well, I don't have to be approximate. I could use my middle mouse button and tell you 1077.5. So 1077.5. Love to see it close above that, and I'd continue my bullish sentiment there. So let's get to crude oil. This is
I was going to say we got to do crude because it's starting to break out, right? We are over that $64 finally. Now we have to see where it settles. Crude settle is at 230. Usually it's does not that much after 230. So we'll have to see where this ends. But the bulls are happy right now. I can tell you that on my stream, since my Twitter stream, since the oil clan follows one another. So the oil bulls are happy right now. If this can hold, the oil companies will be happy. And again, we still have kind of a tight market. The fundamentals are there. We're starting to sort of see the twilight of shale, meaning production has been sideways, and we think that we're going to start seeing more production kind of come offline. Because first we had kind of this major rush of M&As, and nobody was like drilling anymore. They were just buying production rather than capital expenditure for new production. And if you listen to the Q1 calls, all of the majors, at least, and some of the miners, all have, all scaled back capex in the United States. And so watch that carefully. At depressed prices, that would get worse, right? So, which would be horrible, because then you set yourself up for a really ugly oil spike a couple years down the road, which you don't want to see because that's bad for every economy. So I would, if we can get, I think 60, 70 is kind of the happy place for this, where it's not too expensive for the consumer and it works for the oil companies. And so I'll see if we can kind of slip back up into that range after being depressed. And with the market sentiment being so terrible in this market for since for a year and a half now, honestly, sentiment's been poor. Even when we were at higher levels, sentiment was still poor. We'll see what happens. Again, this market COT data is net short, so we could get a squeeze out of this just strictly from how the market is positioned if we get too many people caught off sides.
Got it. And you said 67, right? Did I hear that right?
I think oil companies would be happy between 60 and 70. So somewhere, between 60 and 70. I'm using a wide range, just as where I think that you will have production stay okay in the United States, and it's still okay for the consumer as well. You start staying below kind of $60, and that's when you're really going to see a decline in shale production.
Oopsie. All right, I gotcha. I appreciate that. I'm going to go ahead and just put a little range indicator here. So, I mean, this is a daily chart, and I don't want to be Captain Obvious, but we keep bouncing off of this $64 level, ever since really middle of April, and we did it once. We almost got there a second time. We did probe into it a third time. Almost got there, almost got there, almost got there, and then boom! Now we have a move afoot, as they would say on this. So this is looking like a strong candle so far. There's really not a big wick at the top of the candle. We got some areas here to take out, like this wick here. I'll tell you exactly what that price is. That high, 64.87. A close above that, I'm going to get excited about some further movement up. But a lot of times we've seen, just like here, we just probe into that area of resistance and we come right back down. Today might be a little different because we might close into it, which is, I'm going to keep my eye on that for sure going forward here. So that's let's just pull up the weekly really quickly here. So this is looking.
If you like,
Go ahead, Tracy.
if well, we do have some gaps above too. Some from like not contract gaps, but just regular price gaps that we never filled above. So
Okay,
keeping my eye on that.
got it. Yeah, I mean, from the weekly, it looks weak from the weekly. you know, we were tracking. This is obviously the beginning of the year. We were tracking almost $78, and so kind of a pretty decent sell off here until we kind of got sticky here at the bottom. So this picture kind of changes the way that you might want to think about this. When you're thinking, well, we can't get over $64. Well, yes, you can. And there's all sorts of targets up here to stay within that price happiness level between 60 and 70 that you just mentioned.
Yep, absolutely. So we'll see how it goes. It's been bittersweet for us crude traders. Let's put it that way.
Yeah. So next week, economic news, any big things we need to worry about?
Yep. So next week, the big news is we have CPI on Wednesday, and that is the Fed's preferred measure. And so that day we will have Joseph Wang, the Fed Guy 12, on as a guest, which is the perfect person to have for that day. And then we have PPI on Thursday, and we have Michigan inflation expectations and consumer sentiment on Friday. Pretty quiet week prior to FOMC. Good news is it's FOMC blackout week next week. So no Fed speakers.
My favorite time of the year, I'll tell you. Oh, man.
Exactly.
One last note. I just kind of checked that CME Group Fed Watch tool again a few minutes ago. Again, we're tracking maybe 2 rate cuts this whole calendar year, nothing in the next 2 meetings. Right now, and I wouldn't expect any of that to change. How do you feel about that?
I don't think that's going to change. I mean, I definitely don't think I know everybody wants to see one in July. Nobody expects one even the analysts, nobody expects one for June because we just had a meeting, right? And I don't think much has changed in the last 30 days since they last had a meeting. So I think it's going to be see and wait. Plus, still no resolution. July 9th, the tariff date. So I think this is going to be kind of a big nothing burger because nobody really expects anything from the Fed. I don't think we already know where they stand. They're probably just going to say, we don't have no resolution on trade deals and tariffs. We have to see what's going to happen on July 9th.
Yeah. And one other thing that I'm wondering about, I mean, this big, beautiful bill, I think the objective is to have this wrapped up on the president's desk before the 4th of July, which I don't know if it seems aggressive. Maybe it'll happen, maybe it won't. Any buzz on that?
I mean, we'll have to see what's going to happen. I think, again, the Fed is going to meet before then. We'll meet in July. We'll see what happens. I mean, they're trying to push it through as fast as they can, but then they keep finding things in it that they don't agree on. It's the normal politics on Capitol Hill, and it will add inflation to the economy. So just
Yeah.
be aware of that.
You got to read the bill to know what's in it, someone once said. But any event, Tracy, thanks for being here with me all week. Thank you for the wrap up. Hopefully, you have some nice, relaxing plans for the weekend.
So just gonna chill out. Maybe go party at my grocery store that has a bar.
All right. Well, rock on, Shai. I will talk to you later. And we have another, I don't know, about a half hour. I'm going to talk about time and sales, everybody, because I'm getting a lot of questions about it. What is it? How do you use it? No end of week guests. You guys are stuck with me for the next 30 minutes, but feel free to just pop. If you have questions about anything, just pop them in, and I'd be happy to take my best swing at them as well. So let's talk about time and sales. So first of all, let me just kind of pull up a time and sales window here, and let me match this up with an E-mini S&P chart, since that's what I've got cooking on my time and sales. Oh boy, I'm going to have to get some PAX lines off there. So this is a pretty powerful thing, actually. It's a pretty powerful tool, and you could access this from the control panel if you use the desktop. I know a lot of people talk about order flow a lot. Cumulative delta. Deli likes to use cumulative delta. There's volume profile, VWAP, a lot of different order flow tools. And I consider this to be one of them. And if on the control panel, there's just a new button up here at the top, and there's a little thing that says TNS, right? Time and sales. That's what it stands for. And it's been around for a long period of time, right? Time and sales isn't a new thing. It's been around since the dawn of time, especially when you would, in the old days, when you'd call your broker and you say, hey, I want to buy, the S&P, at 60.08. And then he'd call you back 20 minutes later and say, all right, you were filled at 60.09. And then, of course, you'd be outraged and you'd be like, I want to see time and sales on that. Why didn't I get a better fill? And so you'd go to the exchange and they'd give you the report, and the broker would have to send it to the customer, and it was a big deal. Well, here you could see this happening in real time. You have this data flowing through here in real time, and it's really simple data. So let's just talk about it. In the left column here is the time. This is the timestamp. In the middle column is the price. And in the right-hand side is the size of the trade, how many contracts were traded, 12, 10, 12, 10. Now, what I've done is I've filtered my time and sales to only see bigger size contracts, right? And let me show you what I mean by that. And I'll tell you, and then we'll talk about the color scheme here as well. So I'm just going to right-click and go to properties. And you'll see this thing that says size filter, right? And so what I'm telling the time and sales window is, hey, I only want to see bigger orders. I don't want to see 1 lots, 2 lots, 3 lots. I want to see 10s or bigger. Now, in a busier day or busier time, you might want to change this to 20 or 50 or something else. The other thing I have is a block alert trade up here, and I have it set at 80. So I'll get this little B here. You could see in my time and sales window, I have that little B there. That means there's a block trade, 301 contracts, and we'll talk about what that means in terms of price in a minute. But I could just change this back to a 1 and hit apply, and then what will start happening is all of those will start piling. All the smaller contracts will eventually start piling in here on my time and sales. But for the conversation, let's keep it at 10 for now. I'm gonna hit apply and OK. And we'll just kind of look at this here. Now it's color coded too, right? And the way I have it color coded is pretty much if the trade happened on the bid. And let me pull up a trading ladder here just so we could really kind of tie all this stuff in together. Where is it at? There we go. Why does it never save my colors? I wonder. I got to fix that. Sorry about that, guys. Okay, so remember the bids are on the left hand side, the offers on the right hand side. The space between the bids and offers are called the bid ask spread, and it could be more than one tick, but in some of the more liquid markets, it's usually one tick, which is the smallest price increment. So that's where the trades are happening. They're either going to happen on the bid or on the offer. And if trades happening on the offer suggest some upward pressure, trades happening on the bid suggest some downward effort as well. And you could see this with cumulative delta, where you could see the net trades on the bid versus trades on the offer. But in the time and sales now, what I'm seeing is I have it. Green means the trade happened on the bid, and you could color code this how you want. And then red means the trade happened on the offer. And so it helped. Oh, there we go. I got the ones back in here again. So that's kind of that's how I have it color coded. And why does that matter? Well, it matters because when you see some big size traded either on the bid or the offer, it could tell you, it could suggest to you whether a big trader is getting into a big position, right? And so let me go back here and reconfigure this to 50. I think I did. I'm sorry, to 10. All right, I did that. Hit OK. Now, when you reconfigure it, it starts it over. Unfortunately. Oh, no, we don't. We got it way down here. OK. So you can see some of these big ones. Like, all right, here's a pretty big block trade on the offer at 95.50. There's 500 lots, and then followed up with a 20, and then all of that has to be absorbed, right? All that has to be absorbed into the marketplace, and so you could kind of track how that's being absorbed, if it's being absorbed at all, right? So these were definitely a big order. And so you can kind of cruise up here again, and you can see more. The color coding is subtle. Don't worry about that so much. But here's another 94. Here's another 227. And then when you kind of glance through this, you could kind of look at the chart and decide, well, what is that? How does that jive with price action? And so, I'm kind of looking at this and saying, okay, so 215 block count, 97.50. And then look what happened to price, 99s, 6,000s. And so the price went up initially, right? The price went up initially on this big block order, and it tells you kind of the story of where the price pressures are. And so that's why I kind of like to make it a little bit bigger than all these ones and twos, because all these ones and twos really kind of dilute the price action. So I'll put this all the way up here. And so right now, we have a block order at 97.50, 111 contracts, again, on the bid right there. And so you would think intuitively that would suggest some downward pressure, but it doesn't, right? It did the opposite. So we had a big buyer come in, and what happened next? Well, price went up, right? The next print, 98.5. The next print, 6,000. So when I see these big orders come in, I'm like, all right, there's buying for a reason here. This is either covering or this is establishing a long position. And most likely it's going to be covering, right? So in this particular example, given the bullish nature of the day. So boom, we have this big order come in. And sure enough, really shortly after that, this big order came in at 11:38.14. And, within a minute and a half, we're up to 6,000, right? So upward pressure came into the market on that big number. So again, you could set your filter to however you want to set your filter. But again, it's something, and each market's kind of unique, right? So in S&P, you might set your filter to a bigger number than you would maybe the micro NASDAQ. On the 10-year notes, you'd set it to a lot bigger number as well, to kind of see where those big institutional orders are coming in at. Oh boy. Appreciate the questions, folks. Trading tour, I'm fine today. How are you doing? It's Friday. How could you not be fine today? Keith asks, how do you get multiple domes? All right, so here's the trading ladder here. I have an E-mini S&P trading ladder up right now. Again, this is a desktop. All you need to do is just go back to this control panel here, click on that new button, And then you could go ahead and launch a second dome. Just click on it. It launches the second one. And then if you wanted to see a different market as an example, which is, I guess, is why you're asking, you could change the instrument. So I'll go ahead and change it to MNQ, double click, and then you could see it in action. And one of the things that's bothering me is the color. So hang tight. I'm going to right click. I'm going to change the color. Where's my properties tab at? And specifically what I want to change is the background, right? I want the background to be black because I think we'll be able to see it a little bit better. And that was the bid buy. Where's the sell background? It's probably under S. My guess is the sell background's under S. It is. It's got that crazy gradient color to it. Apply. Keep your fingers crossed I did it right. And okay. So that's, you could, again, all these colors you could change and you could modify. But that's how you would add a second trading ladder. And again, this is a very module software. So you could have as many of these open as you want. If you're covering multiple markets, I know a lot of traders like to actually place their trades through the trading ladder, which I'm a super fan of, by the way. And you could even set up your ATM strategies. So in other words, if you wanted to do an automated OCO, kind of like how Stowe does it, you could set it up down here under that ATM strategy on the trading ladder as well. The dome should have, all right, so Keith, that's a good question. How does your ladder have 9 numbers on each side? It should have, this is called Direct Access Level 2 Trading Ladder. And it shows the offers 10 deep. I'm just going to change this one over to the right to the 10-year note since it doesn't move as fast and you could see it better. Let's do that really quickly. So, and again, let me get, Jim, let's do the colors. No, we'll leave the colors for now. But you can see there's many thousands in the offer, many thousands in the bid. And this is called 10 ticks deep, right? You could see the order book 10 ticks deep. This is the order book at the CME. It's transparent. You could see that on the order book. A lot of trading platforms give you the ability to see 10 ticks deep, or just the best bid and offer, just one, right? And I know Ninja gives you both options, so you can go and log into your account preferences and set it for the 10 instead of the 1. And then some markets, some will even give you 20, right? So not all markets you'll get 20, but some you'll get 20. And I'd argue 20 is a little overkill, probably, especially with the way the stock index futures move. But yeah, so I don't know what trading ladder you're using. Hopefully you're using the NinjaTrader trading ladder, and you could do it that way as well. Mielo, how you doing, man? Good to see you. I've lost track, man. Really, things have changed so much. I would just log into your portal and check it out. And I don't want to give you the wrong answer with that. Sorry. Don says, Jim, since order flow cumulative delta is essentially cumulative TNS, how could we use OFCD so we don't have to have a separate window to look at it, or is this not the case? For this platform, if I understand the question right, Don, this time and sales window it's its own thing. I don't know of a way you could embed it on the chart without having maybe a customized plug-in, if you will. I mean, I would reach out to the Order Flow Labs guys immediately. I'm wondering, I mean, I think that they do. So yeah, but that's a good question. I don't mind having it side by side. A lot of traders, including me, have multiple monitors, right? You're only seeing one monitor right now because of the way we do our presentation, but a multiple monitor might work as well, might help you out as well with that. So hopefully that answers that. I don't know if it does or not. Any other questions, feel free to pop them in. Appreciate you guys spending the last couple of minutes of the week with me as well. Contrarian says, time and sales is way better than any volume indicator. Well, yeah, it's definitely something to think about because a lot of times you will see some really large orders here. coming in. And the other thing it tells you is, what kind of institutional participation are we having in the market outside of the opening range, right? The opening range, right off the bell, you're going to get some big orders coming in, right? Market on open. And then at the close, you're going to have market on close when that algo sign goes off. And so, but in the middle of the day, you don't often have these really, really big orders. And so when you do see some big orders in the middle of the day, it could also suggest that there's a move afoot. There is either buying pressure or selling pressure, depending on what the chart looks like. And so you could use that to help you prep for a trade idea, if that makes any sense. So the other thing you could do here, by the way, is you could add columns to this trading ladder, right? So just right click and you could add columns, and a couple of the columns that are very popular are going to be tick for tick volume profile. And I'll go ahead and add that, hit apply. And actually what I want to do is I want to show volume text too. So I'll click on that little check mark there. It says show volume text. And so now all of a sudden what I have on my Superdome is a tick for tick volume profile right there. So, this is particularly helpful also for folks that are like, okay, we're in this range right now. We have kind of a volume node right here at 60, what's the price? At 01 and a quarter. And this, this is an area of interest for me now, right? Is it going to draw, an additional, like a magnet? Is it going to bring some more attention to this price or not? So, and this will form, of course, as trades are coming in real time. Oh, boy. So that's another feature. You could also add another column for P&L, but we don't need to get into that at this point. Does Ninja offer the ability to aggregate all TNS for all option chains? Dan, that is not yet. I do not know. I know that the whole right now the developers are going crazy getting option stuff together for this platform. So that's going to be available in the near future. But you ask a tech guy, when is it going to be done? You're probably not going to get a good answer. So all I know is it is a full court press, Dan, for sure. We talk about it all the time. So it is coming. It will be here for sure. Oh, boy. Tracy said, China clears rare earth supplies for U.S. automakers. Oh, there you go. That's a positive thing. There's a move afoot. Still no deal, but there's a move afoot. And she says bond markets are back on inflation watch after surprising job data. Yeah, we can go. We'll check out a bond chart before we end it today, for sure. So, any other questions on these two things? Let me know. The trading ladder or the time and sales. So, and by the way, too, I have an E-mini. One other thing that it took me a while to figure this out, but at the bottom here, I have a tab. So there's a lot of tabs. There's a lot of tabs in this platform. And I could click on that tab and it'll open up a new instance of this, right? And then I could change the market, right? I could just go, right click and just pick a different instrument and we'll change the market. And so I could have a series of these tabs at the bottom. And so I could toggle back and forth. If you don't want to have multiple windows open, you could do that. And that's the same with the trading ladder, right? That little plus sign there, you just click on it. It's going to open up a new trading ladder. And then again, you could have, as many of those tabs as you want. Maybe you don't have a lot of real estate on your screen and you don't want to have multiple domes, but you want to be able to toggle back and forth. Just click on that, toggles back and forth, and it makes it a little bit easier to kind of, navigate it with a small monitor, or maybe you only have two monitors. I don't know how many monitors everybody has, but in any event, I'm going to go ahead and move this off my screen right now. Any questions on that, just pop them in. And then let's go ahead and just check out some bonds and some other markets here to end the morning session. 30-year Treasury bond, 112 handle again. And really, pretty big sell-off here. We just crossed through that 21 and that 8 EMA. Let's go to intraday chart. And this is the greatest chart of all time. And I'll tell you why. This is a small case, B as in boy, volume profile distribution that is really almost almost textbook perfect, right? We have this Gaussian distribution at the bottom. We have a really symmetrical point of control in the value area. Yeah, a little bit of an extended value area, but that's okay. So it's really like, all right, here's price happiness right here, folks, in this market. I wouldn't be surprised if this is where we closed, 112.17, 30 seconds. I mean, we're tracking 112.13 right now. We're about 4 ticks off of that low. Remember, it's a $31.25 tick, so it's a bigger tick size than the other markets. But so that's kind of observation number one about this. And this is a 10-minute chart. It looks similar on a 30-minute or whatever you wanted to put up. But look at the session VWAP here, right? We were really kind of trading through it after the London initial balance, and it was very uncertain here. Then when we started selling off, this was a precipitous decline. We sold off big time on the number this morning and ended up settling down here. And look at what happened to that VWAP. We never recovered. We had complete price separation from that VWAP ever since we crossed under it. And so what does this tell me? This tells me today there's not going to be, most likely, there's not going to be any retracement back up to JAX2 or to S1, short of any new news that is entering the marketplace. So that's why this is just a great chart. So in any event, I think we're kind of done for the day. We got that Menthor Q 1-day min right there as well, right next to that point of control. So there's 2 areas of interest as well. If you want to add that high vol level also from Menthor Q and that 0 DT put support, all of these are all coming in around, that 112.16, 112.17 level. So that's kind of price happiness right now. Yeah, we tried to make some new lows in this candle right now. Buyers came back and pushed us back up 112.11. I'd be surprised if we break any lower than that. Things could happen. You never know. But that's the story of the 30-year Treasury bond. Frank asks, is there anything new about the pulse indicator for the NinjaTrader 8 app? App meaning the web version of the software, Frank, or the phone version. So I think in terms of 3, right? We have the desktop platform, which is my favorite. It's what I use. We have the web-based platform, which you could pull up on an Apple or on a browser or anywhere. And then you have the app that you download from the App Store, which is also a really, really powerful app, by the way. It's really well designed. For this, I just wrote a note down on my pad of paper, Frank. I will find the answer to that out for you, and I'll ask you. I'll let you guys know next week. I don't know off the top of my head what the status of that is, but I'll find that out for you. And there, of course, is a move afoot to get that going. So, thanks for that. Thanks for that comment. All right, let's recap stock index futures also here. We're still in June, 687,000 contracts, 15,000 only in the SEP. Next week is when this is going to start moving. So we're going to focus on the June right now. And it didn't quite eat my fib line, but it tried to eat my fib line. So the way I drew the fib line is from, where did the rally start? And this is kind of, I could have said, well, I'm going to draw the fib line from the very first candle of today's session. And this is, again, a 10-minute chart. And I said, well, no, because we had some sideways consolidation here. And, the London initial balance was sideways here. We never got past JAX2. But where did the trend really start? Well, someone could argue, well, it started when we had this economic release hit the street. Yeah, but even look before that. We had, we have a series of higher lows, right? So I'm looking at this series of higher lows, and that's where I anchored my fib line from. And then I drove it all the way up to the very top, the high of the day, right, which was during the open. And now it's created this fib measurement on the left-hand side of my screen, on the right-hand side of my screen. And it really is a measurement, right? It's just measuring the distance in increments based on Fibonacci levels. And so, I'm looking at this chart and I'm saying, all right, where do we retrace to? We retrace to the 50%. What does that mean? After we hit the high, we retrace to the 50%, which is the key level. Now, it's not a fib number technically, but it's a key part of the fib retracement tool. And I'm looking at that, it's like, well, we didn't have a candle close below it. We didn't have a candle close below it. So this was kind of just a textbook retracement at that point. And then we kind of rallied back up above the 38.1 and kept going a little bit, right? We kept going. We didn't get up to the 23.6 and we didn't get up to the point of control, but we kept going. And what happened in the process of all of that fun activity was a couple of things. One, we keep crisscrossing around that 6,000 level, right? That call resistance level. It's kind of a psychological resistance level as well. And we're about to tag it right now as I'm speaking. And then VWAP, the session volume weighted average price, we've been trading through it for the last 5 candles. 1, 2, 3, 4, 5. So that tells me, well, maybe no one's in control right now, right? Maybe buyers aren't in control. Maybe sellers aren't in control right now. A little bit of a sideways chop going on. It's lunchtime. That's not surprising. And I'm going to go ahead and draw my rectangle here. And this might not give us any clues for what's going to happen between now and the close, but it gives us an idea of what the state of the market is right now. And it's kind of like price happiness right around that VWAP and that 6,000 level, which was, unattainable a couple of days ago. And now it seems this market seems to like it. So we'll see that. In the bottom of the value area is right below it as well. That's that blue dot, dot, dot line. And so we'll keep an eye on that as well in this particular market. So, overall, we're up about 0.91% on the session. So, I guess that's better than nothing, right? That's better than nothing. Let's just shoot over to the micro NASDAQ right now real quickly, see if it looks any different. It's probably not. It's going to be very systematic today, probably. Although it's a pretty dominant point of control right here, 21,825, and then competing point of control a little bit lower here. I would kind of keep my eye on this level as well. But more importantly, there's a little bit of a volume node here, volume deficit, I like to call it, low volume node. I mean, it's not really a low volume node. This is a low volume node, right? During this whole, rally after the economic release. But when I see these little notches in the volume profile, I just kind of imagine, well, maybe this will mature and fill out as time goes on, right? Maybe we're done making all-time highs today, new highs today. Maybe not. We're still way above VWAP though, so this is looking a little stronger than the E-mini S&P, and I think everyone's said that today, right? It's looking stronger than the E-mini S&P. I'll do a real quick fib here and wrap this up. Appreciate everybody sticking with us to the bitter end this week. Hopefully everybody had a prosperous week. Fruitful week, I'd like to say. Yeah, we never even retraced to the 38.1. This is looking stronger. This is looking like a sticky point of control. And who knows? Maybe we'll make new highs today. All right, folks. What a great week. We had a great lineup of guests and contributors. And more importantly, we had a great community in the chat, a great community listening to us. We really, really appreciate everybody being with us. So thanks again, everybody, for being a great week. We're not going to have an afternoon broadcast today, but we are going to be strong Monday, 8 a.m. East Coast time. I'm taking a couple of days off. You'll see me on Thursday, but Monday it's Deli, Shy, special guest, and all the regular suspects, including the Order Flow Labs guys. But again, Stowe, thank you very much for that package. You are the greatest. I really appreciate you. In the meantime, everybody, have a fantastic... Oh, by the way, one thing I forgot to mention. Nick for a Tick, one of the Order Flow Lab team, will be with us. It's just in the chat right now. Thank you, Mission Control, for reminding me. 5:45 p.m. Sunday. That's East Coast time. And it's a great segment that Nick does, kind of lining everything up, going into the open after the weekend. And a lot of stuff happens over the weekend, and then the markets react on Sunday night. So tune in for that. NinjaTrader Live, Nick for a Tick. He will be there Sunday night. Larry, thanks, everybody. Appreciate everybody being here. And let me remind everybody, especially going into a weekend, be safe out there, please. Be good to each other. We'll see you next week.